Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
What is going on, ladies and gentlemen? How are we doing today? Welcome to the last live stream of 2022. Glad you guys are able to get on today. I'm very excited to be going over pretty much the entire market here. We have so many setups for the remainder of the year. So good to have you guys on. As always, drop your location in the chat. Let's see where you guys are from, what pairs you guys are looking at to start the new week upcoming in a couple days. What pairs did you guys trade this past week? Did you guys make some money? Did you guys lose some money? What happened? Let's have a little bit of a chat before we get started. We do have a pretty nice giveaway that I'm going to be doing at the end of this live session, so stick around to the end. I know these can be quite long. However, they are very good information, very good value. I do go over everything that I'm seeing on all of these pairs. So definitely to your advantage to keep up with everything. I mean, time and time again, every single live session, we're having trades go into profit. So very nice. Let's see. Mark, good to have you on. Hugo, good morning. Good morning. Peter, good morning. Paulo, good morning. Portugal, Kenya, Dublin, Ireland, Manchester. Awesome. Now we have New Jersey in the house too. It's early morning for me, so I have to get my coffee. Pips for profit overall 3%. That's not bad at all. 3% in let me see, this past week, it's pretty good profit. Greetings, Madrid, Germany. Good to have you guys on. I'm so excited for this live, guys. I'm pumped. It's early in the morning for me. Well, relatively. Got my coffee going. We're going over 21 pairs today. 21 pairs in depth. I'm going to try to make them, relatively brief. However, still give you guys what you guys need to know about these pairs. I'm going to go over AU. I'm going to go over EJ, EJ you have there. Those are the pairs you traded this week. Did produce some nice setups. I will discuss those. Good morning from Wisconsin. The video is not good. Okay, let me try something, guys. Let me try this. Already live. I'm already live in 720p. That's what I was told to run it on. If you guys have any suggestions, I can't run it in 1080 just because I don't have, as of right now, like a cable running from my computer to connection. I'm using Wi-Fi. So you guys I'm not tech savvy whatsoever. So if you guys have any suggestions as to how to make the quality of the video better, that'd be helpful. But we're gonna do the best that we can anyways. And just a reminder, as always, if you guys have any questions outside of this live session that you need help with, I'll be more than happy to help you guys. I'm not here to say, oh, you must join my team in order to get help. I mean, I'm going to help you guys if you guys have questions. That's why we have these lives. And, if you don't get your questions answered here, feel free to message me. I'll drop my Telegram in here so you guys can have it. If you need to contact me with any questions you have, I'll just drop it here in the chat for you. But today is the last live session of the year. We usually take about 2 weeks off, the latter half of December off, because, the market's going to be relatively slow, definitely erratic price action over the last couple of weeks to close out the year, and then probably some erratic price action with the first week of the new year as well. So we usually like to take about 2 weeks off in December, then about a week off in January. So we'll be back on the 9th of January, but yep, today will be the last one. And then we'll be back in the new year. Should we trade the last 2 weeks of this year? I am personally not. I am, I'm going to manage out of my current positions that I have open, but I'm not going to be opening new ones. So all the setups that I have currently are for your benefit only if you decide to trade them. I mean, they're not bad setups. However, low volume will start to come in. Price will probably move relatively slow. So it's also important to just be cautious, just because towards the end of the year, we see a lot of, seek and destroy mode, usually, taking buy side and sell side liquidity, just shaking people out of the market, making large moves before the end of the year. It doesn't always happen every single year, but it could. That's just why I like to take time off. Plus, the markets will be slow, and I like to spend time with family and friends around, Christmas time and stuff. So works out anyways. Turkey. We have Turkey in the house. Nice. Wisconsin. Beautiful. All right, we'll give it like 2-3 more minutes, guys, and then we'll get started. We have a lot to go over, so do not want to waste your time today. Definitely take some notes, mark these levels off on a piece of paper or on your own chart so you can have them for later. This stuff, plays out time and time again, so definitely be prepared. All right. Where else you guys from? We got to get this chat going here. What's a live session without US 30 and gold being asked? What's up, Jordan? How you doing? Good to have you on today. Florida, Houston, nice. So guys, just as a disclaimer, if any of you are new to my live sessions, I do not trade anything but Forex. I don't trade commodities, indices, cryptos, stocks, anything. Not to say that smart money can't be applied. Smart money, it can be applied to any asset class, any financial market, anywhere. However, I just personally just trade Forex. I like the way Forex waves. I like and I like the setup, the aesthetic of the setup. It's very pretty. Trying to find smart money, institutional manipulation, and cryptos or anything else can be quite difficult, and it may not be picture perfect. So in order to learn, we want to be able to have a nice, pretty looking setup. So those really occur on Forex pairs. Slovakia, nice. Are you trading all 21 pairs you were covering? No. I go over these pairs because, I have tons and tons of students, like everyone who's on here today, probably looking at different pairs. So I only trade, the majors and then a few other crosses, but that's it. But, you don't have to mimic what I trade. You can trade, whatever you'd like. I mean, all the currency pairs, they present smart money. I like the majors the best, so US dollar based pairs. Doesn't mean you can't trade other ones. I mean, that's fine. I mean, there are setups on other pairs, like we'll go over today. Atlanta in the house. Awesome. All right, guys. So how this is going to work, we're going to get started here. I'm going to go over 10 pairs to start, and then we're going to stop. We're going to take some questions, and then I'll finish off with the rest of the pairs, probably the remainder 10 or 11 that we have. And then at the very end, we're going to be doing a huge giveaway, a nice Christmas, New Year giveaway here. So it's going to be interesting. So definitely stick around for it. Save your questions until I open it up for questions, just because I can't see the chat when I'm currently going over charts. So let's get started here. And as always, if you have any questions, just save them for when I stop the presentation. All right, just to make sure that you guys can hear me and see me, because I don't want to be talking to a wall when we do this, just drop a yes in the chat if you can see my screen and hear me fine. Okay, perfect. Thank you, guys. Awesome. So we'll get started here. I'm going to go over ADUSD. All the ones that are currently highlighted in red, I will go over. Everyone that is not highlighted in red, unfortunately, I'm not going to discuss. I just don't see anything on it to discuss, and it wouldn't provide any value to you. So guys, not always will there be something to talk about. Like, let's just say someone wants to trade EuroCAD. If just because you may trade Euro CAD doesn't mean there's going to be a setup on it all the time. So that's why when I don't have these pairs highlighted in red, there's just nothing to talk about. Now, obviously, something like Euro CAD is extremely bullish, right? We're looking for overall buys. But at this moment, I just don't see anything worth talking about, nothing of value that would actually help, most likely. So with AUD USD, the first thing I want to go over is, the setup that we took this past week. So obviously, higher time frame, extremely bullish, right? We're in this higher time frame pullback phase, right? Overall, we are bearish. That is correct. We are still in a bearish market, so we could head short. This is a lower low, lower high, lower low. This is a pullback. So, just taking it from the swing points, we can see that we've come into, this 71, almost a 78. So we are in premium price. So we are still looking for overall shorts. However, we're still going to be potentially hedging with buys because we still are currently in an uptrend. Also, at the same time, we did come down into this repricing event. So we can see with this huge crash back in 2020, right, the huge sell to buy, and then we had the repricing event, or really just the failure to generate a lower low. Because if we're making lower lows and lower highs all the way throughout, we would expect a pullback and a lower low to form just to continue with the overall trend of the market, right? But we never got that. This was that last selling volume before we went long and broke the structure. So we call that repricing. Just kind of, reprices itself. The bank algorithms do that. There's a multitude of reasons why. One of them is just, kind of to make the market more efficient. It's really just almost like a transfer between sellers and buyers, essentially. So we've actually come down and mitigated that. So in all reality, we could continue to push higher, right? But we still have to respect the structure that we're seeing. So we still are overall bearish. So we have to be taking profit within counter trend buy opportunities at areas of supply. So this is a clear area of supply. It's just one of the other levels of supply. We also have supply, within here. Whoops, I didn't mean to do that. I meant to do this. Supply in here, supply in here, supply in here, supply in here. There's different levels. So within this huge expansion, we need to be taking partials throughout these levels, right? Because who knows if we may actually react off of one and reverse. So in this case, we've come up into an area of supply, a huge imbalance that was created. So that was my overall take profit for a buy that we had in here. So we were creating higher highs and higher lows. Down to a lower time frame, we can see a high, we can see a low, intermediate high, low, high, overall low. We swept sell side liquidity with this run. We made a move, and then we failed to generate a lower low and a higher high. So when we break counter trend structure, we always look at the counter trend move, right? So higher high, higher low. We're looking for a higher high now. So where's the counter trend? We have a low, we have a high. We have a low, we have a high. We have a low, a high, a low. Kind of broke in counter trend structure here, but the most important thing is the fact that we failed to generate a lower low in the market. Right? We did not do that, and instead we made a higher high. So we have cleared structure, and now we're looking to start this new uptrend, right? We're looking to go like that for an expansion to make that higher high. So that simply flips from supply in here to demand. And that's exactly where we took it from. So I think it was 2 weeks ago, we had the original entry. Equal lows were taken with news, sell to buy, and we got the wick entry. I got the fill on this. The price came back down the next week. And on Monday morning during New York session, we mitigated again. So we swept Friday's low, which oftentimes will happen. Usually Friday's low or high. It just depends on the actual setup at hand, but I'm not surprised that this occurred. So with that being said, stops were still below the overall low that we had, and we took price long. Actually, it was below here. So when people are asking me about stop loss placements, usually you would put stop below this low here. Why? Because this is the low that generated the new higher high in the market. Just because, our entries here doesn't mean our stop loss is there. The only reason why I put stop loss here was because of the risk to reward. See, if I put it down below here, it would only have been like a 1 to 1.6, and that just doesn't meet my rules. So putting it back to where it was before, this is, still not technically, with my rules. It's at 0.2% away from my rules. My rules are really, at least a 1 to 3. I did take this trade because it was just so close, and it was a phenomenal trade. So the probability was on my side as well. But normally I don't take trades less than a 1 to 3. But anyways, I had to put stop below here. If I got stopped out, oh well. The reason why I did that was not only because of risk to reward purposes, but because, when you have lower risk to reward, that requires you naturally to win more trades in order to be profitable. Think about it like this. If you're always aiming for 1 to 2s, 1 to 3s, you're going to have to win, probably close to 50%, maybe 60% of your trades in order to be profitable. But if you're, aiming for 1 to 5s, 1 to 6s, 1 to 7s, well, maybe you only have to win like 25 to 30% of your trades to be profitable. So, that's why the higher the risk to reward, the better. But we have to be setting our stop losses and take profits at appropriate positions. I can't just want to aim for a 1 to 5 and put my take profit here for the sake of it being, 1 to 5, because obviously you need to understand what's happening in the market, where you need to be placing your take profits. And in this case, placing the take profit at my objective level right in here, with this higher time frame level of supply deemed to be the most appropriate. And that's where I had to do it. Even if it was a little bit less than a 1 to 3. So that's where it came into. We can see the actual reaction. So not only did we get pretty much a wick entry on this, but we almost got a wick take profit, pretty much. I mean, it's very close. We reacted off our entry, reacted off our take profit. So that's, a sign of a really good trade and good due diligence within the market. So we did come up into that level. I don't really have anything on it currently. We have this level of supply in here. We can see that this level failed to generate a higher high and we ended up rolling over. This was also kind of like a retest of this area of demand. We can see high, low, high, low, high, low, reacted, failed to make a higher high, lower low. So that is that flip from demand to supply. However, we haven't really officially broken the low yet. I fully expect that to occur. However, I really want price to come lower first before maybe having some sort of pullback before continuing. So this is looking like, some sort of distribution schematic, right? We're slowing down in price. We've already had, the large impulsive moves, and now we're just creating discrete higher highs and higher lows. We've reacted from a higher time frame level of supply, as we originally discussed. And if we break and make a lower low, that could be a good sign for a reversal. So when we see stuff like this, guys, right? If we see stuff like, we're slowing down in price, and we're coming into an area of interest and maybe we break structure to the downside, let's go check the VFI and see what volume is doing. So this is a really good indication of a potential reversal if we can get divergence. And in this case, there was no divergence, right? Volume is still making a move to the upside, and so is price. That doesn't mean that we're going to continue long. That just means that there's no additional confluence there. But remember, divergence is just an additional confluence. It's not like the deciding factor on whether I place the trade or not. So in this case, I would really like to have a break of structure to the downside. So I'm going to get rid of this now to not confuse you. I'm going to get rid of all these markups here because we've already hit that trade, hit that take profit. So looking for, just continuations down. I really want to see, really further momentum being shifted, and then maybe some sort of pullback into 681, and then looking for potential buys from 6.5. Right? We have a lot of imbalance in here, and this is a previous demand level. We also have lower demand, in here as well. So that's a potential opportunity, but we'll see what happens when price, if price gets down there in the first place. So that's what we're looking for here on AUD USD. CAD JPY. So there's no current setup at the moment, and it might take a while for it to form. But really what I wanted to go over was the higher time frames and look at what's going on. So very similar to AUD USD is CAD JPY. We can see the distribution, right? The slowdown in momentum and price. Okay, so why do I have this blue box here? So let's just kind of zoom out and look at what's going on. So higher time frame, right? We are, I guess you could say, in a downtrend, right? Lower low, lower high. This is the low that produced, or this is the high that produced this low. We pull back into that area of supply. I'll just show you really quick. You can see that repricing, right? This was, a high, a low, a high, a low, a high, a low, failed to make a higher high, lower low. So that will turn into supply. And I know it's like weird price bars because we're back in like the 1990s, 1980s. All right, so this is like higher time frame, guys. So anyways, we pull back, have a deep pullback of, let's see, 1995 to 2007. So it's at 12 years, 12-year pullback. Obviously, this is the weekly time frame. So we have a 12-year pullback, and guess where we came into? We came into that level precisely. Guys, just because, the low, you might trade lower time frames. However, it's so important to understand higher time frames because 12 years later, we're still mitigating the same supply level that we created in 1990. These orders are still on their books, guys. These orders don't go away. they still have to mitigate price higher and lower time frames. So these institutions may be in trades for years on end, right? So they mitigated price and we continue short. And we can see that, we are starting to, again, kind of slow down in price. Not really a distribution, but, potentially a makeshift distribution. But anyways, last buying volume was in here. We came back down. Haven't broken structure yet, but pulled back and failed to make a higher high here and then rolled over and made that lower low while, kind of mitigating that area of supply. So this is where we started the downtrend. Now, I know you'll probably say here, well, we've already mitigated it. Well, yes, we have, but that doesn't mean we can't come up again, because really, what is this? Yes, we already mitigated it, but if this is if this is a lower low, what did you naturally expect in a downtrend, right? Some sort of lower high. So that would be that area of supply I would still look for to continue short. So we pull back again, just a deeper pullback, I guess you could say. We have a lot of sell side liquidity running below these lows here. So that could be, an area for a draw on liquidity down sell side for higher time frame. And this could take months to years, guys, right? This would be a more higher time frame trade. However, we can take, lower time frame profits. So again, we created that supply level just like we created it over here. We have finally come up into that level. So if we scale down to a lower time frame, let's take a look at, the daily. We're starting to slow down. This is a huge daily trend. So this distribution really started back in March of this year. Early this year, we started the distribution, right? But we could also have distribution on AUD USD on, the 1 hour time frame or the 4 hour time frame that may have started, November. So literally last month. But this one started beginning of this year. So this is why the markets are fractal, right? The price, different. What I'm trying to say is everything happens on every single time frame, right? There's still accumulation, there's still distribution, there's still mitigation, there's still imbalances, there's still manipulation. Everything you can think of in terms of smart money and supply and demand and Wyckoff will still occur on every time frame, right? It's fractal. So, anyways, this overall level was we came into a prior demand, right? Just like this came into, just like this came into this demand here. This came into this demand here. We came into this demand here. So did this. And we failed to generate a higher high. And we rolled over and made the lower low. So we have broken structure here on CAD JPY. So what I'm thinking is that we can have some sort of pullback. I'm not sure where we'll go because it's not very clear. We have 3 levels. We have this daily time frame supply in here. We have that many supply in here, and then that overall final last buy before the sell-off that failed to make a higher high within this sort of uptrend, right? That's where we stopped, didn't close above that level. So 3 levels here. I'm looking for pullbacks, but on the lower time frame, we can see that we're currently just consolidating. So we're not doing anything. So lower time frame, there are no trade opportunities in here. We're just making a range. So there's no point of trading within this range. It's just kind of dumb. So we're really waiting for some sort of breakout. So I wouldn't be surprised if we went like this: sell to buy to sell, right? Take enticing sellers below the low, come up, take their stops, enticing buyers above the high, mitigating price, making a lower low. If that occurs, this would be a beautiful institutional move for a pullback to short. Now we could have a deeper pullback, right? Because who knows? This is just one trend, right? We could continue to go like this all day long. We could continue to go like that. How do I know when we're going to have a pullback? I have no idea. But if we do, then this would be one expansion. This should be one pullback and then one expansion again, right? So where could we look to pull back? And we just identified those levels. So we're going to be, highlighting those levels probably in 2023 as well. So we're going to keep an eye on that. But currently there's no setup, and I'm just trying to give you guys the bias and, the different levels that we could come into. So definitely have those marked up on your chart, guys. If you miss any of these levels, just go back and watch the recording of this video. Just skim through it and you guys can find it. CAD Swiss franc. So with CAD Swiss franc, the CAD has been in a ultimate downtrend, right? We have just absolutely died. And we can see that across the board. Euro CAD is pushing to the upside. NZD CAD, AUD CAD are pushing to the upside. CAD Swiss franc is pushing down to the downside. So the Canadian dollar is extremely weak at the moment. And we are continuing to look for shorting opportunities. So lower time frame, let's take a look. So, we're still making lower lows and lower highs. we don't want to fight this trend. We can continue to trade with the trend until it breaks, right? Let's continue to short. And if price finally breaks, then, we'll look for some sort of overall pullback for a continuation. I don't know, right? But we're still in a downtrend. We can still find opportunities. So right here in the 30-minute time frame, I didn't see this, and I'm so mad at myself. This is the perfect opportunity and a perfect trade that, Ariel Fx looks for. So essentially, the trend is down, short. We're looking to short the market. We create 1, 2, 3 points of trend line, right? Retail is selling off the third point of this trend line here. That's why we have that selling volume. So price will then go and run the liquidity. Run the liquidity, mitigate prior supply, which is this level in here, and then make a move to the downside. So now we look at the counter trend when price is down here. Let's look at this counter trend. We make a high, we make a low. We make a high, we make a low. We fail to make a higher high, we make a lower low. So now this is just one expansion. Now we're looking for the pullback. Well, where do we look to pull back into? This area of supply, because this was once demand, just like this was once demand. This is demand. We reacted off demand, went long. This is demand. We reacted off demand, didn't make a higher high, and we rallied to the downside. So that will flip to supply. So that would be a beautiful trade in there. And then the news came out and propelled it further downside. Hence why the news is just used as the excuse to do what it was always meant to do anyways. The news would not have went like this. Why? Because there is no point for the institutions to come higher. They would just be losing on their own positions, and that would just be stupid. So their own algorithms would tell them, okay, great, we're going to inject more volatility here to continue because we've already mitigated a level that we're interested in. Now the news is going to be used as the excuse to move it sell side to continue with the overall trend of the market. So that's essentially what it does. So when people say, CPI news is coming out, well, how do we trade that? Well, that's the dumbest question you can ask, because you can't trade news on its own. Trade the already valid levels of the market, right? If there are no valid levels, don't trade it, even if news comes out. If there are valid levels, you can be confident in the fact that news will probably be used as the excuse to either, come into those valid levels, make a move from those levels, sweep liquidity prior to coming into a certain level. It's all pre-planned. It's all predetermined, right? So anyways, we make a move to the downside and we pull back into certain levels. Now, I called this out. However, I did not take the trade. And I told my VIP members I did not take this, and I wasn't going to. So the reason why was because after the huge push to the downside, we saw an immediate reaction. We've pretty much covered this entire move in a matter of, 9 o'clock, 13. So what? That's like what, 4 or 5 hours? 5 hours time. We've almost, come all the way back up and filled this entire move. The law of effort really states that, when we have an explosive move to the downside, you really want to see some sort of trickle, trickle back to the upside. That would be, nice for continuations. So I was just a little nervous in that sense. So I guess you could say my psychology got to me, but these levels of supply really did play out. This was like a 5-minute level of supply here, which actually came into. So in all reality, I probably should have traded it, but we move on, right? We have sell side liquidity, ended up working out. But anyways, so we make a lower low, we pull back, make a lower high. We make a lower low again, pull back, make a lower high. Make a lower low again. So within this, retracement, let's see what we can find. I think it was like the 30-minute, maybe the 25-minute. Yeah, I guess you could say the 30-minute here. You can see this doji candle. So we have, high, low, high, low, high, low, high, low, failed to make a higher high, lower low. So we got in here. We're in a little bit of profit. We came back up. We're sitting in a little drawdown, but I still do expect price to roll over. Whether we come back up, maybe take out Friday, Thursday's high and come into I think it's like a 5-minute level. Yeah, it's like a lower time frame, 5-minute area of supply might feel some imbalance. So we may come a little bit higher, but overall, look at the law of effort again. Very strong impulsive move, very slow and steady pullback. So it creates a lot of sell-side liquidity with that quote-unquote trend line. So we are looking for overall shorts. Market's in a downtrend, and we're entering off these levels of supply. If price ends up going long, we did our due diligence anyways, and, you will lose on occasion. It's just how it works. But you can't automatically expect to lose, and you can't be scared of taking these trades because, we're in a downtrend. We've been in this downtrend for a long time. It won't refresh. But anyways, you know how many opportunities you could have taken off of? Supply right there. Beautiful. Supply in here, supply in here would have come into it. Supply in here. I mean, there's so many opportunities. So you got to keep trading with the trend until it breaks. Fine. I could trade all of these levels of supply. Obviously, I would need to go in and make sure additional confluences are there. You can't just trade off of supply. I mean, unless that's what you want to do, but not always the smartest decision. Like you need confluences like this. But if I had traded all of those, I would be up in the double digits % return. So fine, I lose one trade if it ends up going long. I'm not saying it will, but if it does, fine, I lose 1%. And then my aggregate positions over the course of the entire trend is still in huge profits. That's why you can't care about losing trades on occasion, guys. It's a part of the game. You can't get away from it. It's always going to be there. You will always lose trades. I will always lose trades. Every other professional trader will lose trades. That's how it works. So you have to learn to embrace it, but learn to, be not necessarily so picky where you don't take trades, but you have to be cautious enough to understand that you can't always be involved in the market. Okay, if there's no setup, leave it alone. There's no point of forcing a trade just for the sake of being involved. I know it gives you that dopamine rush and you always want to be involved in the market, but maybe the best thing to do is if you don't see anything clear as day, stay away from it. There's no point of doing it because when you're trying to force something just for the sake of being involved, your probability of winning the trade significantly decreases, and you don't want to have that happen. That's why statistically, 95 to 99% of traders lose, either short-term or ended up long-term losing. Right? I know so many people have made so much money in this market just to lose it again. So got to be smart. Okay, Chef JPY. So I have a lot to talk about here. I'm going to try to do it very briefly. See, we've done 4 of them so far. So higher time frame, let's take a look. Let's go out to the higher time frame. So we are still higher time frame bullish, right? We're making higher highs and higher lows. Prior demand we've swept sell side liquidity. New demand is in here. Well, really kind of all of this, right? Almost like this triangle. So this is all demand in here, just lower time frame demand. So we ended up expanding again very strongly. We've come back down and we've started this pullback, right? This is just an overall pullback. We're probably going to make a move to the upside at some point, right? Because 1, we're still in a higher time frame uptrend. 2, we have buy side liquidity resting above all of these highs here. And I guarantee you, I bet if I pull my trend line, see if retail's selling in here. Ooh, look at that. They probably are. They're probably selling off of this level here. 1, 2, maybe 3 touches, which is why we're seeing this selling pressure. So we may have an immediate reaction back to the upside and take all of the liquidity resting above it. And we're in an uptrend anyway, so we still need to be looking for longs. But anyways, this wick in here did not come into this demand. We finally did here. So that's why I'm saying we might end up actually reversing and breaking this counter trend structure that you're currently in a pullback phase on to the upside. Sorry, guys, I'm just sipping my coffee throughout this. All right, 4-hour time frame. Let's scale in. So I've marked off the levels of structure. Right, we have this high, we have a pullback, lower low, I guess you could say. Pullback, swing point high. This is not a lower low, but kind of still in this downtrend. Low, high. This is the high that created this new low. All right, this is the overall pullback, right? So we really need to break this structure in order to be considered bullish. Remember, we've created this low here, and we've also come into this level of demand. So I think we might have an opportunity to go long. However, we are still counter trend bearish here. We've come into a higher time frame demand level. But technically, this is the low that generated this high. This is not the low that generated this high. This is the low. So what we could do, based upon market structure, this is the range of the market right now, right here. So we're trading within this range. This is the low that generated this high. It's very simple if we just can take a step back and look at the higher time frame range, right? So we can still technically go like this all day long, all day long. This doesn't mean we're bearish. This just means we're having a deeper retracement. As long as we don't close below this level here, we're still bullish and we still need to be looking for longs. So that's why I say, I'm going to still be looking to hedge my buys because I'm going to be looking to buy here. Well, I'm not anymore because I'm done trading for you. But if you guys are looking to still trade, I mean, these are still valid levels, right? So I'm just not trading because, I'm just going to take some time off. I want to spend some time with family and friends. This doesn't mean these are invalid levels, but markets will be slow. I just want to give that caution. Anyways, so I will be looking to buy here because we've come into a higher time frame level. However, we can still continue lower. Definitely. We can continue lower, probably into 140. The reason for that is because this is the low that generated that high up there. This is the repricing event that occurred, right? This is the last selling volume in here, that level of demand. So that's why we're looking to take profit right in there. It's always important to understand where you're putting your stop loss and where you're putting your take profits. So we could have an opportunity to buy from down here if price does come lower. So let's scale in. 1 hour time frame, we're in this pullback phase, right? So we could easily continue long. And the fact that we came into higher time frame levels, we could easily blast off. So I'm just looking to continue to buy with the current trend, right? We've made a high, we've made a low, we've made a high, we've made a low. Last point of return, that area of demand, we came into very nicely here to the T, created a new demand level, made a higher high. So pulling back into that demand, that would just continue with this overall structure. So that could easily be an opportunity to take. So stops would just go below that demand level. If we come lower, then this overall level of demand could work out. So I would trade this as 0.5% risk, 0.5% risk, just because if this just blitzes right through, then you're only losing 1% and you're fine. But we're also going to be looking to short. So why is this a valid level? Because of the fact that we came into a higher time frame level. Normally when we're bearish, we don't want to be looking to buy off demand. If we're bearish, we want to be looking to sell off supply because we want to see further downside. But because of the fact that we came into this level very nicely and had a very strong reaction from it, this may not be a bad level. Now that you could get in prematurely here, meaning you don't know if we're actually going to break structure because technically we're still bearish, right? But you could take the chance of buying down here in the potential to catch a bottom in the market to catch a reversal of trend back to the upside. So these two are valid in my opinion. It's a little bit risky, but that's why we just use proper risk management. Anyways, why do I have this level marked up? So this level in here is now a swing point because we've come into really the last point of return. And I can probably show you on the 4 hour, it's better. So this area of supply, right? This was that last buying volume before the sell-off, and we came in, filled in balance pretty much to the T, came into this doji candle supply level. This is the high that generated this level. Actually, this is the high really. This was the start of the downtrend. But anyways, we came into that level very nicely, and we had a strong reaction from it. So we could easily pull back and continue. So obviously, I don't know if we're going to pull back, but that's the only way we're going to get into the market. So entry would probably be in and around this 15-minute area of demand or supply, excuse me. So why in here and not like up here? I mean, yeah, that could be valid, but what are the chances we're going to pull back all the way back up and go short from that level? Probably not that likely, especially when we're so bearish right now. If we're going to continue short, we're probably just going to have a very small retracement continuation. But how do we know and have confidence in this level here? Well, it's not only a level of choppiness before continuation, so acting as that intermediate supply, but it's also kind of a demand to supply flip. We can see here high, low, high, low, high, low. This is a level of demand in here with this counter trend pullback, you could say. So we've come into that level, had a reaction, but failed to make any sort of higher high. And instead we rolled over and made a lower low. So that could be a valid level to pull back and short. However, stops would have to go above that high. And I know what you're probably thinking, this is a huge stop, 134 pips, but in all reality, to our overall level that we're looking for, the appropriate area of demand down in here, it's still a 1 to 5.37. Very good risk to reward. 5.37% on one trade is a phenomenal risk to reward, in my opinion. So you don't always have to be so precise here. Because the risk to reward was there, I can place my stop above the overall swing high, right? I don't have to place it above this level. Now, if you want to be a little more risky, you can. If we think that this is going to be the valid level and the most valid level only, then that could be an area in which you pull back into to short stops above that high. But here's the thing, guys, and this is why a lot of people fail. It's because of their own psychology. It has nothing to do with not understanding the concepts. It has everything to do with psychology. So think about it like this. When everyone is trying to catch home run trades, they're going to be putting their stops maybe right in here, or maybe even, heck, scaling into this level and looking at this candle as a sponsor candle. This is not a sponsor candle, guys. Never swept any liquidity. It's just there. Okay, this is just the overall supply level. But they may look to do that. They may like to go like this, and then may look to even go like that and try to catch these types of trades, which if you catch them, great. That's a huge return for you. However, in the psychology of a trader, when you're trying to be so precise and trying to scale into like the 1 minute time frame and catch all these, your win rate is going to drastically decrease because you're trying to be so precise that you're naturally going to lose more trades than you win. Not to say that you can't be profitable. You can be extremely profitable doing this. I mean, heck, I could, go all the way back down to what the 40 minute, or 40 minute, I'm thinking 140, excuse me, guys, 140 down in here. What is that? Like a 1 to 50, 1 to 63. So sure, you could lose 62 trades in a row, win this one and still be profitable, right? If you have 1 to 63s every time. But here's where the psychology part comes in. How many of you would be okay with losing 62 trades in a row before winning a 1 to 63? Probably none of you, right? That is why it's not always the best decision and the best to try to trade these lower time frames unless you have, a lot of other confluences. Like you're taking a lot of other things into consideration. Like maybe you have come up into a level of supply and you have broken structure on the lower time frame, maybe the 15 minute, you pull back and then see another schematic on like the 5 minute, you scale in for a pullback to the last point of supply in the 1 minute. Maybe that would be enough confluence to trade off of like the 1 minute time frame, right? Because you're putting a holistic perspective into the market and not just scaling in immediately looking at the 5 minute and lower, right? But we have to just think about it in terms of just common sense, right? The lower the time frame you go to try to trade these, probably the more trades you're going to lose before you win. Doesn't mean you can't be profitable doing it. You can be profitable with the system, but the psychology says that most traders are not going to be okay with losing, in this case, like 62 trades before they win one at 63, right? So when people do that and they can continually lose, like I think like the stat is like if a trader loses like 2 or 3 trades in a row, they start having a exponentially higher probability of revenge trading and increasing their lot size to revenge that trade and over leverage. So just knowing that, that's automatically why traders, will fail. It's because of that psychology and the fact that they're trying to trade these lower time frame levels. Why can't you just place your entry here, stop here? The risk to reward is still there, 1 to 5.4 essentially, and just let it go. If price goes like this, oh well, you're still in the trade, whatever, and then it finally makes its move. Let me show you a perfect example before I move on. AUD Swiss franc. Okay. AUD Swiss franc right in here. Had an opportunity from this level of supply, put my stop above the high. Just left it. Higher time frame trade, 1 hour time frame trade, right? Price came into it, we reacted, didn't touch it. Price came back up, didn't touch it. Price came all the way back up, didn't touch it. Understanding that this is the high that created this low. If we're going to be bearish, we can still trade up into this level. It's still up into this, imbalance. Price did that. Price came back down, we pushed back up. And then we finally made the move. But if anyone was trying to, put stops right there, you would have gotten stopped out. If people were trying to move stop too quickly, you got to move stop when we break the structure here. When we finally broke below it, then we can move stop to break even because that's the swing point. So, and also, people trying to take confirmation trades lower time frame on the 1 minute are just going to get stopped out. So, it's not all just about coming into a level and then breaking structure immediately, pulling back and shorting. There's a lot of other things you need to look at when trying to have confirmation as a bias, but not always will confirmation be there, and not always will it be pretty enough to trade in a way that you might like it to be, which is why traders oftentimes lose. So this is why I don't necessarily only trade the higher time frames. I'm just saying that, if you don't have anything else, meaning if this is your only level and the stop has to be placed above there, yeah, that's what, 52 pip stop. This is still a 1 to 6.78. Place the entry and leave it. So I don't care. I was stuck in this trade from this Thursday, December 8th through when we finally started to push down, I guess you could say maybe in here, the 14th or the 15th, right? So what that is about a week's worth of trading. So imagine being stuck in a trade for a week and your psychology is going nuts because you're constantly in profit, coming back up, now in drawdown, in good profit, back into drawdown, back in profit, back into drawdown, and finally makes it move into profit. You got to let your psychology go. You got to do better in that side. And that's just why, this is a highly probable trade anyways. I don't care if I'm in a little bit of drawdown or my stop loss a little bit larger. If my take profits at a good, an appropriate position, 0.6 in the market, which is an appropriate level, and my risk to reward is there, just leave it, because then you don't have to worry about your psychology in that regard. So where are we at? CAD Chef again. So anyways, I'll be looking to trade from that level. I'll also be looking to hedge with buys from here and here, half risk on each of these, full risk on this one, meaning 1%. So if we go higher, great. We'll probably maybe be in one of these levels. If we go short, hopefully we'll be in this level here. So it doesn't matter, right? If we get into all these positions, let's just say price goes like this, goes like that, and then goes like this, goes like that, whatever. Oh, well, if we go long, great. I'm in this position. I've lost this position. And then at this point, I'll probably be break even, but let's just say I'm not break even. I'll lose that position. Still, the winner here is what? A 1 to 7.2, but I've used half a risk. So that's what? 3.5, 3.6, 3.6 and then minus 1 right in here. That's still 2.6 net aggregate positions with net profit. So that's why it's okay to hedge when, higher and lower time frames are not in alignment. But anyways, then I'll just be waiting for, if price comes shorter, to maybe look to potentially buy it at 140. But we'll need more confluence there. But you guys know my levels and the reasons why. Euro AUD, I don't know where my markups went. I think they just disappeared. Oh, well. I don't have anything for this at the moment. Oh, there they are. Okay, cool. So I wanted to just help you guys understand, what is going on in here, where price could potentially go. So we are still in an overall downtrend, right? Let's identify the structure. Low, high, low, high, low, high, low. This is just an overall pullback, right? This is a lower time frame trend to the upside. This is the high that generated this lower low. So this is the range, okay? So now we can see here, higher time frame. This is our last buying volume, swept liquidity before rolling over, making that lower low. And then lower time frame on like the 4 hour, we can see the lower time frame trend in here. High, low, high, low, high, low, high, low, failed to make a higher high, lower low. That's the supply level in which we came into. But the overall buying volume was 1.58 psychological level. So that's where I have my take profit. But we can see that we are reacting from this level now. So yes, we still are technically bullish, right? We're making higher highs and higher lows as we were trying to buy it in here, which we did not get stopped out on. Remember, stops were below here, and we missed it by a good, 8 pips or so. So I got a little lucky there, but had a secondary level. If we came down into imbalance where we swept this liquidity here, you can see these lows and then the head and shoulders pattern that we faked out from. So that's another good level. Obviously, we can delete this now because it's no longer valid, but take profit there, 1.58. Now, I might still be looking to buy this because technically we still are bullish, right? We're making higher highs and higher lows, so you might as well continue to trade with the trend until it breaks. I have something in my eye. So I'd be looking to fill this imbalance here, obviously. So pulling back, maybe, back down into here, maybe back down into here. This is really that last selling volume that failed to make a lower low, right? You can see low, high, low, high, low, high, failed to make a lower low, higher high. So that could be an area of demand that price pulls back into before potentially making a move higher again, right? However, we do also have to understand that we're pretty much coming into our last point of return here, guys. Right, this is an overall lower low. This is an overall lower high. This is an overall lower low. We're just in a higher time frame retracement, and that's that area of supply. So if we have a reaction from the level, I will probably be looking for sells if I can get some confluence. Obviously, I need more price action first, but we'll be looking for potential sells maybe next year, but also maybe looking to hedge because we're still lower time frame bullish. So I just wanted to give that clarity there. There's no current setup at the moment. I mean, I guess you could say this is a potential level of interest. You can keep an eye on that for potential longs. But in terms of sells, I need more price action first. Euro NZD. Okay, so this is where another piece of hedging can come into play here. So obviously I can probably get rid of all this. These have already hit take profit, but we can see that we are still bearish here, or at least in a higher time frame retracement, making lower lows, lower highs on this 4 hour time frame. So we're still bearish. Let's identify the structure. Low, high, not necessarily lower low, but lower high, lower low, lower high, lower low, overall pullback, lower high. This is still the range. This is the high that created this low. We're finally having that overall pullback. Doesn't mean we're breaking structure. Just means we're probably pulling back into an area of supply to short off again, to make another lower low within this sequence. So lower, or I guess you'd say higher time frame, we're bearish. Higher time frame, we're still bullish. Right? We're making higher highs and higher lows, and I want price to come back up into a higher time frame supply, 1.77. So I do want higher prices overall. We can see here 1.63 is right there. So that's a psychological level. And then we also have this previous swing high that failed to make the lower low. Obviously, you can see that within the downtrend. Pulled back, failed to make a lower low, higher high. So that's about 1.6274. And then we also have some imbalanced lower time frame. And then this last, like very last selling volume in here, right? Low, high, low, failed to make a lower low, higher high. So multiple levels that price could come into potentially before reversing back, but we haven't come into that yet. So technically, yes, we're still bearish. We need to be looking for shorts. However, at the current time, this was extremely bullish. And we have swept equal lows, clear sell, clear buy. And I guess you could say we did break this counter trend structure, but again, we're still overall bearish. Just because we broke the counter trend doesn't mean we should be looking for longs, because, we're overall bearish. So this could just be an overall pullback for continuation, which I fully expect to happen, which is why I sold it in here. We had the sell, called that out before. We're in really good profit. I'm also hedging my position right in here. We can see this little tiny area of demand, and then the overall selling volume that swept liquidity. It's also this fake out of this head and shoulders, shoulder, head, shoulder, right there. Sell to buy, taking the stops, and you can see all the people selling. 1 touch, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 touches of that trend line. Retail is definitely shorting that, but they're shorting it at the wrong time. Instead of from the appropriate supply, they're shorting off the trend line, which creates the liquidity for the banks to run so they can place their shorts and go short. Now, not to say that we can't go long. That's why I'm still hedging half risk and half risk. These are really good risk to rewards. If price just breaks right through and make a lower low and hit or take profit, 3.92 minus a half is 1. So 2.92%, almost 3% return aggregate positions. If we end up going long, well, great. We're in this position now. Could come down into this position. And if we end up going long, the risk to rewards are high enough to where we would lose on this trade, win on either one of these two trades, and still the aggregate positions would still be in profit. So looking to buy, I'm already in buys here, 6.590, and also looking to buy again at 6.5. Just in case we do actually end up going long. But if we don't, we're still in shorts. So I have moved my stop above the high here, right? Not a break even yet, not quite, but at least above this high so I can mitigate, this distance, this risk right in there. That's what I can mitigate. Okay, continuing here. Let's see, 1, 2, 3, 4, 5, 6. We'll do a couple more, and I'll take some questions. So with Euro GBP, we are still overall bearish. Okay, we're in like Euro NZD, kind of in this overall pullback phase. You can see lower lows, lower highs. We're overall pulling back, right? But if we go out to the higher time frame, we're still bullish, right? We're making higher highs, higher lows, higher high, higher low. Where could the higher low be before a higher high is formed? Well, I'm noticing this level of demand in here, 0.85 psychological level, right? Round figure. Why? Pull back, lower low, lower high, lower low, high, low, high. Fail to make a lower low, higher high. That will flip to demand. We have not come into that yet. So that's why I'm still looking to short with this counter trend, because we haven't come into objective yet. So yeah, that's what we're looking for. And where are we looking to sell? So we still are in this position up here. These positions up in here, we had one lower time frame in here off that supply, ended up hitting break even, right? Came up and hit break even, didn't lose any money, but we also made money because we closed below the previous swing points. We took partials. We had one in here as well that came up, and I think I did lose on this trade because we didn't quite make a lower low. You can see we stopped, didn't close below this level yet, so I couldn't move stop to break even yet. We ended up hitting out. But anyways, I don't care. I mean, I lose trades here and there, just happens. but we made some money here, so that helped mitigate some of that loss. And then we're in this huge profit here that when we finally close below this previous low here, then you can take partials off that position, move stop to break even. So net, I'm still in profit on these positions overall. So now we can see that there's a lower time frame supply level after the sweep of liquidity, right? Descending liquidity, buy to sell. There was a repricing in here, which is exactly why we sold it right in there. And we can also see that we're distributing. We swept these highs, distributed, and then fell. This is the end of the distribution. This is the last point of supply within this distribution schematic. So this is really where we kind of broke and started the downtrend. So now we're kind of just pulling back. So stops, or my entry was 0.871. So simply put, it's just a lower low, lower high for a lower low. That's what we're looking for. But where precisely can we get in? Well, off the pretty much the test here of this spring, right? We sprung, we broke structure. We kind of had that last buying volume before the sell-off. So that's where I'm looking to short it from. So we got in a little bit of drawdown. Stops are above the high, and we just missed our stop loss. I did not get stopped out there. So luckily, we got lucky there, but that was the appropriate stop loss placement to go. Couldn't really, you could have placed it definitely above the swing high, which would be most appropriate. However, that would not be a good risk to reward. So I had to place it above that swing high. What you could also do, guys, if you want to, which would help probably, is have double positions. Do half risk and half risk, both at the same entry and the same take profit, but one half risk is above just this supply level high, and the other one is above the overall swing high. Just in case it does come back up and hit my stop loss and then go short, you're still in this position here. And this, even though this is not a good risk to reward, this profit would help to mitigate the loss that this would incur. So it's almost kind of mitigating some risk. But if we don't come up into stop loss and we make a move to the downside, well, now you're making, your full amount, your full profit. So that's just another little key tactic you can use. Anyways, we're still looking to short off. I don't really have any other steps at the moment. Just wanted to show where we're likely to head, and then you guys can take control after that. Potentially maybe look for some shorting opportunities. Euro USD. Okay. Alrighty. So with Euro USD, I really want price to come back up into, I don't know why I had. Oh, okay. So this is just like an intermediate level of supply here. We also have 0.950, which is really just this last swing high, right, before the sell-off. So we're just looking to take profit at these levels. If we're going to continue to look to buy because we're still extremely bullish, but we need to be looking to take profit at some of these levels just in case we have something like AU where we come into the level and then have a reversal. So we'll see what happens. So going back to EU, we're extremely bullish. This one finally hit take profit. Remember, we had this, guys, all of you in VIP. We talked about these two levels. We came into this one to the T, made a higher high from this high, moved stop to break even, took some partials, came back down, hit the break even, but also had this lower time frame demand. We came back down, formed the head and shoulders fake out, shoulder, head, shoulder, faked out, sell to buy. So that's why we're actually looking to buy from here as well. You got to mitigate that. So we came into that level. And we finally hit this for 1 to 6, but we had half risk here, half risk here. So we made 3% on this trade. Not bad at all. Anyways, lower time frame opportunities, even though this is one high, one low, and one high. So technically we could have had an overall pullback into this level for buys, right? That's what we were looking for. But we also had a lower time frame trend. High, low, high, low, high, low. We took advantage of a lower time frame supply or demand level down there. Stops were below this low. We came down, accumulated lower time frame, and then went off, right? We broke the counter trend structure. You can see low, higher high, right? And then we created this selling, sponsored move, and then we made another higher high again. So we have a high, a low, a high. So we pull back into that level. Stops are below this low because we also had another level right in there of demand. I'm not going to get into this, but looking to show you where we were entering this week, and we made a move to the upside. So definitely stops are break even for those. We also are continuing to look for buys, right? Because we're making a high, a low, a high, a low, a high. We're looking to pull back either into the start of this demand or lower time frame demand. And here stops will probably be below this low because this is the low that generated this new high. This is just one expansion. So that's the swing point. So that's what we can do. you can get buying opportunities from in here, looking to go long and continue to trade with this trend. If price actually breaks and we go short, well, then we have an opportunity down in here because this is a high, this is a low, this is a higher high. This is one expansion, right? But within this expansion, we have a trend, high, low, high, low, high, low. So we can continue with the lower time frame trend here, or we can have an overall pullback into our last point of demand. Now, that is a level of demand because we had a clear accumulation schematic on a lower time frame. We broke out of the lower time frame structure, repriced, and that's where we broke this structure here. So that's a key level of demand as well. If we come into, great, we'll look to long it. If we end up breaking to the downside, these are still valid as well. Okay, so I would treat this as probably, because you don't want to be too overexposed, right? I would probably treat this as, one trade, or two trades. The first trade will be this position, and this position. Okay, so third risk, like third of a percent, right? Third of a percent. These are already at break even. This one right in here, we're in profit if we go long. Great, we've already taken partials, phenomenal. This one right in here, from that demand level, is at break even. We've already taken partials as well. So we're covered on those positions. So those positions are this one right here and this one right here. So these two risk to rewards, these are covered. Cool. And then this one would be treated as the other position. We have 1, we have 2, we have 3. So the start of the sponsored candle, we have imbalance, we have lower time frame demand. So again, third of a percent. Okay, so the most we can lose on this is 2%, not a lot at all. But if we win, we're going to be winning big. So hopefully you made sense of that. Go back and rewatch that. I just don't want to take too much time talking about one pair today, just because we do have a lot to go over. GBP AUD. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, 2 more, and then we'll take some questions. We have equal highs. We're in an uptrend. We're looking to buy this. Okay, so continuing with the trend, I mean, we're bullish. We need to be looking for buys, right? So we need to be looking for sponsored candles. We need to be looking for demand levels, change in structure, lower time frame. So let's scale in here. We're making higher highs and higher lows. You can see a higher high. We can see a higher low. See a higher high could have an overall pullback for a higher low. So we have multiple opportunities. We have a lower time frame trend, which is in here. You can see low, high, low, high, low, high, low, higher high. So we could go like that for a lower time frame trend. We also have a higher time frame trend, high, low, high, low, high. We also have a higher time frame trend, high, low, high, low, high. So multiple different opportunities, right? So if one breaks, it doesn't mean we're automatically bearish. We're just going to the next level. So if we, come into this level here, or these two levels here, and we break, well, then we can look to buy it off of the higher time frame swing point, which is imbalance. If that breaks, then we'll go lower into our higher time frame swing point, high, low, demand in here, where we swept liquidity, failed to make a lower low in the counter trend, higher high. That could be an opportunity there. If that breaks, then we'll just wait for price to get back down into a higher time frame level of demand down in here. There's a higher time frame level of demand there. You can see once it loads, there we go. Huge sell to buy, repricing, continuation. We're bullish, so we need to be looking for longs. The probability of us going long is way higher than the probability of us going short. That's why we can't be scared to take these positions. You just got to have risk. You got to assume some risk. Obviously, use good risk management, but you can't be scared of taking trades. But we also need to confirm these trades. We do need to do due diligence in the market and make sure these are actual setups in the first place. So anyways, going lower time frame. We've already talked about, really quickly, we've already talked about this level here, right? Swing high, swing low, swing high. This is just an overall pullback if we get it. Imbalance, entry there, stops below the low. That's self-explanatory. Down in here, this is our overall pullback, higher time frame. Low, high, swept liquidity, that previous low, had made a move to the upside, failed to make a lower low, chop, and then we started the uptrend. So that turns into that last point of return demand. So having those levels understood, now let's take a look at the lower time frame. So we have equal highs. That's buy side liquidity that we're looking to run. Now in here, we can see we have a lower low, lower high, lower low, lower high, lower low, lower high. We sweep liquidity. So if I scale in here, You can clearly see we swept liquidity with this wick, taking this ascending liquidity here, sell to buy, and then we broke the counter trend. We not only broke this counter trend swing, but we also broke that counter trend swing. So we really should be looking for pullbacks to eventually long it. Pound is still bullish. So 15-minute, I really just have two levels. Really, the two levels here, if we get overall pullbacks, are 1.8065, which is the start of the selling volume right in here. The sponsored move that swept liquidity, also the last selling volume before we broke structure to the upside, made the uptrend. Then we also have a lower time frame repricing. Pretty much self-explanatory. So that's demand level. So half risk, half risk there, if that's what we're interested in doing. So good opportunity on GCAD. So we are in profit on GCAD at the moment. So this was a little bit of a risky setup just because it is counter trend. Just because, this is very important, guys. When we have these types of trends, high, low, high, low, high, low, high, low, right? You guys can see that. And we make a lower low. We still have to be careful. Yes, we can look to short it off. It's a little bit more risky. This is a supply level. So yeah, we're selling off here. But that doesn't mean that, if price goes like this, and goes like this, people will be like, okay, well, why did I lose this trade? We broke structure. Yes, we broke structure lower time frame, but we still are extremely bullish. We just have to keep that in mind. We still are extremely bullish. So even though, we broke structure and maybe price goes long, this would just be classified as just a deeper pullback, right? Expansion, more of just like a deeper pullback and then continuation. So we just have to be mindful of that. Just because, yes, we broke structure here, right, doesn't mean that we're just going to absolutely tank. I mean, I would like to see some sort of pullback, maybe back down into this imbalance. We can see a little bit of a demand in there. So, just some sort of retracement before maybe continuing. But if we end up actually just busting right through and going long, we have to just shake it off and just be, okay, I get why that occurred. We're still overall bullish. Yes, it didn't come into anything here. This never really, there was no demand in here or anything that would be significant of, oh, we actually came into something, we should now look for longs. But, if we do go long, we can't be so mad. But anyways, we did start to distribute. We did fail to make a higher high and a lower low was formed. We formed lower time frame liquidity in here. Snag that liquidity, mitigated, and now we're continuing short. Wouldn't be surprised if maybe we made another move to the upside, take Friday's high, fill in balance maybe in there, and continue short like that. If we already go short, this is the level, right? So we're taking risk at that point. So we're just gonna see what happens. Pound is still strong, CAD is still weak, so we're still bullish overall. We're just taking advantage of a little bit of a risky counter trend opportunity. Okay, so we'll go into GBP Swiss franc after I take some questions. Not going to take too long with these questions. I still do have quite a bit to go over. All right. What do we have? Quality is bad. Oh, I'm sorry, guys. I really am sorry. I really don't know what to do. I mean, I'm in the highest quality that I can do. If I go to 1080, I don't know if it would work. Oh, man. All right, I'm going to try to get this figured out with Cam. I'll talk to him about it. Maybe we can use some other platform. I'm really sorry about that. Oh, man. Okay. Can you pronounce the numbers at key levels? We cannot see the numbers ourselves. Yeah, I can do that from now on. Sorry, guys. I just didn't know it was that bad. Maybe I can do this over Zoom next time. Maybe that would be better. I'm not sure. I'll figure it out for next year. Let's see. Hey guys, how about you just pulling up the chart he is on? Yeah, if you want to do that, if you guys want to have like two screens, you can like make it half of the live session, half like trading view or whatever, and you kind of can follow along and mark stuff off as I go over. That could be an opportunity. Why is the session so lag? Yeah, sorry guys, I didn't know. I'll try to get it figured out. Sorry guys, I don't do US 30 or NASDAQ. I'm only Forex. Oh, let's see. Same structure repeats itself on even 1 second time frame. Yeah, exactly. I mean, it's all fractal. However, you need, if you're trading the 1 second or even the 1 minute, you still need to look at the higher time frames. Everything still needs to be in conjunction. You know, you can't just look at one time frame and have the concepts and then try to trade it. Well, what if you're not in a specific level in which those concepts would actually work out? See, a lot of times, you know, you'll have, you know, let's just say liquidity runs, like let's say you build sell side liquidity, but you know, you're in a downtrend, right? You build sell side liquidity, you're in a downtrend, price takes that sell side liquidity, moves to the upside. If you're in a downtrend, you still need to be looking for shorts, when in all reality, you took liquidity to the downside, you made a higher high. Well, maybe that higher high was just an overall pullback that came into something else to go short, but then you're trading it as a lower time frame sell to buy, and you're looking for buys, and then you lost the trade. So that's just why, you know, not saying lower time frames are bad. I mean, everything's fractal, but you know, you have to look at the holistic view. That's why so many traders fail, because they automatically just go into like the 1 minute time frame or the 5 minute, and they don't take into consideration the higher time frames. What qualifies a valid supply and demand zones? So let's just say, you know, you're in an uptrend. Maybe price has taken liquidity to the downside. You're making higher highs, higher lows. You're looking for, you know, when price makes a higher high, right? You obviously have the swing low and then you have the swing high, right? That expansion to the upside. So when you're looking for pullbacks, you know, you look for areas of price that have some sort of consolidation within that range. You have some sort of, you know, if you're in a bullish market, you have some sort of selling volume before the continuations. And I'll go over a quick example. You know, let's just say that, you know, you're in an uptrend here. This is one expansion. This is one pullback, one expansion. Let's just say you have like something like this. You know, that would be an area of demand. One, you want to be buying at discount anyways. You don't want to be buying up here. You want to be buying down here, unless there's like lower time frame swing points that you can play, you know, take advantage of. But if price breaks, then you're looking for higher time frame retracements into like a demand like that, like some sort of selling volume to continue, some sort of maybe, I don't know, you know, consolidation before rising again, you know, reaccumulation. That's an area of demand that you could trade off of. Really just selling at premiums, buying at discounts. Obviously, if we're in an uptrend, we're not looking to short, we're looking to buy. So, you know, stuff like consolidation, stuff like retracement, sell side. Here, I'll probably try to show you an example on the charts. So something like this. If we're in an uptrend, right? Actually, I'll go here. If we're in an uptrend, we're making higher highs, higher lows. Higher highs is just an overall pullback, higher low, looking for a higher high now. Well, why do we stop there? Well, because within this counter trend here, we've made a low, a high, low, high, low, high, low, high, low, high, failed to make a lower low here, made a higher high. So yes, this is demand. I mean, you have demand in here, you have demand in here, and you have kind of demand in here. So you could take this as 1, 2, and 3 trades to split up your risk, or you could just take it off the overall selling volume, which is essentially right where this demand started, where the start of the imbalance move occurred, and just place your entry there and stops below the low. So that's kind of an easy, you know, definition of kind of how to spot supply and demand levels. So stuff like this as well. Low, high, low, high, low, high, kind of consolidation, rise again. And then we rise. So we break the counter trend. We can look for pullbacks into that demand to go long. We've shifted trend, so we need to be looking for like last selling volume to go bullish. Now, demand can be like intra trend as well. Obviously, we need to be looking for it at discount for buying. So, you know, pulling a fib from the high to the low to the high, we can see that we're in discount below the 50%. So we have two levels here. We had this level of demand, unmitigated demand for one, and then that level down in here. So we're in profit on that one, and then if we come lower, then we're looking to buy it there again. We're overall bullish, so we need to be looking for these areas of demand. So hopefully that helps. It's just kind of like the, you know, easy definition of it. Can't really go into too much depth. That's why I have my supply and demand course as well. Let's see. I did that split screen idea work. Great. Good. Yeah. Awesome. Yeah. That's what I would recommend if you can. Maybe have like half of your screen be the live session, half the screen be your trading view. You can kind of keep up with it. What confirmation to use to get into a trade? I mean, there's so much confirmation. I can't like talk about that live here. I mean, there's just so much to go over. I just don't have the time. You really just need to be looking for, trading with the trend, looking for, institutional formations within trend, looking for, supply and demand levels within trend. I mean, it's so hard to go over that because that's just such a broad question. So unfortunately, I can't really give you a good answer over this live session. Where can I find Forex mentors? Well, I guess you can just look for people who, know how to trade, know how to teach. I guess. I mean, I don't really know where you go to find them. You just find them. I mean, I guess you could say I'm one of those people. If you resonate with what I do, then I'd be more than happy to talk to you about how we can help you. If not, then, there's no stress, no worries. I'm interested in knowing how we will tie off the year. See, I don't really know, Mark. End of year volatility is just through my experience, over for the past 5 years, I never really understood end of year volatility. It's, for one, it's slow, especially during Christmas time, but it can be quite crazy because, it's the last chance to be taking buy sell side liquidity before the end of the year, before the yearly candle closes, essentially, before that 12-month candle closes. So that's why you see kind of erratic price action, which is why I don't really like trading end of year. I usually just take it off anyways, because, I like to spend time with family and friends throughout the holidays. So it's also, win-win there. But I mean, smart money, smart money. So, I mean, if the levels are valid, they're going to react. I trade your levels, but I also scalp with these concepts and it works. Yeah, I mean, what you could do, this is what I recommend. If you guys are a part of my VIP community, take the levels in which I'm sending, like the overall higher time frame levels, and then, at least you're in those trades, right? So you don't have to worry about missing out on an opportunity. So many people do stuff like this. So many people will, they'll look for the most precise little 5-minute candlestick within that level, right? Just take the overall trade, right? Take it from the overall level, just take it from the higher time frame level, and then fine. If it doesn't come down into here, right, then and price just moves, well, at least you're still in this trade. You don't have to worry about FOMO. And also, if people are looking for confirmation, like you guys are looking for a lower time frame, I don't know, whatever it is, you may look for, accumulation or some sort of just breaking in structure counter trend. Well, what if you don't get that confirmation and stuff? What if price just comes into it like it did and it starts trickling and it just keeps going and going and there's no pullback? Well, people who are looking for confirmation now have FOMO because they knew that the analysis was correct, the overall entry was correct. They just didn't get into the trade. So now they have FOMO and now they're getting in up here. So that's why I say, just get into the trade so you don't have that psychological stress. Maybe place it on half risk. And then if we get confirmation, whatever that will look like, then you can put on the remainder of your risk, the other 0.5% risk, right? So if price just busts through it, well, you're only losing 0.5%. But if price just trickles on up, at least you're still in the trade. You don't have to worry about trying to add a position because you have FOMO. That's just kind of what I recommend. That's what a lot of people do, and people have found success doing that. That's kind of what I do. Does this work only in Forex? No, it works everywhere. I mean, you can apply it to any sort of, asset class or market, but you need to understand how that market moves first. You need to have that experience. Like I created a video on, head and shoulder fake outs and how to trade that alongside my entire strategy. I posted that to my YouTube channel. And then one person went and commented on the video saying, I tried to apply it to an indice and it didn't work. So this doesn't work overall. Doesn't mean that at all. It just means that person is just as clueless and just didn't understand how to apply it because they don't have experience. So, you have to understand that just because you may not see success with it right away doesn't mean that it's false. Doesn't mean that it's wrong. It just means you don't have experience enough to actually understand how it you should actively apply it. And that's just where it just takes time. It just takes practice and it takes mentorship and it takes guidance. So, it can work on anything. However, you need to first understand how that particular asset class you're trading actually moves, how it works, and how smart money actually presents itself within those specific asset classes. So to answer your question, no, it works in any market. What advice would you give new Forex traders? All right, guys, this will be the last question. Jacob, I will get to your question afterwards. I'm just going to finish up the rest of my pairs because I don't have much time left. I have about 40, 45 minutes. So advice to give new Forex traders. Learn the basics. Don't go quick. Find a mentor. Do the little things right. Use good risk management. Practice on a demo account. Focus on education. Don't focus on making money, right? Because you focus on making money right when you start, you're just going to lose everything. I promise you. Guaranteed. 100%. Don't try firm challenges when you're not profitable. If you're not profitable now, you're not going to be profitable then. It's just how it works. So you don't try to go quick. Don't try to make $1 million overnight. It's not going to work. It's going to take months to years of practice. People who fail in this industry are the ones who are short-sighted, people who want instant gratification. That's why those people will always lose in life. I'm just being straight up. Those people will never be wealthy, and it's just how it works. You have to learn how to have the habits of the ultra rich. You have to understand how money works. You have to understand how money is flowed within the system. You have to understand, especially within trading, how the markets are actually run, how they're manipulated, and you have to understand the habits of traders, like good risk management, proper psychology, patience, obviously confidence, but also, understanding that trading takes time to learn. It's a skill, just like anything else. You learn. I give the example of playing the guitar, right? I said a lot of people already know this example. You could have a mentor that teaches you how to play guitar. You're not going to be a professional guitarist overnight. It's going to require practice. It's going to require continuous mentorship and guidance. So just take it slow. Don't expect instant results. Find someone who can mentor you and understand that this is a long-term journey that could take, months to years to learn, but it certainly beats a 9-to-5 job. I had that and now I don't work. I'm 24 and I am financially free. So, but it takes time. I've been doing this for 5 years. I was not profitable for 18 months. So a year and a half, I was consistently failing, but I stuck with it and never gave up. And, I was able to eventually get it. It just takes time. All right, guys, I'm going to finish up with these pairs, go over the rest of everything else, and then we'll take the remainder of the questions, and we'll do this huge giveaway at the very end. So with GBP Swiss franc, we had a couple of opportunities on a lower time frame in here because we can see these equal lows were swept, sell to buy. This was the low that generated this new high. So we took a trade off of, there was a lower time frame demand in here. Got into profit, really good profit. We swept the previous high, took some partials, moved stop to break even. Obviously, it came down, hit me break even. So obviously, this lower time frame trend has now been broken, right? We just got to keep trading with the trend until it breaks. Fine, it breaks, great. We have higher time frame levels to play off of because we're still overall bullish, right? So we are in this trade here, and we are in good profit. Stops haven't been moved to break even yet because I need to see more price action first. Because price could easily, come back down, go like this, go like that, and then maybe make a move or something like that. I don't know. So I just got to be patient, let the trade breathe. If it breaks, then we have a lower time frame level here. If that breaks, well, then that's just not as highly probable than going long. Meaning we can't naturally expect price to just break structure. We have to just continue to have confidence and trade with the trend as long as we have confluences. So 1.127450 was my original entry. I also have another one looking for 1.1137. If you guys, can't mark this stuff up in time, just take a picture or take a screenshot of the analysis I'm having. But guys, remember, these are not signals. We don't even give signals in my VIP. We give trade ideas just like this. Sometimes I have the risk to reward tool there to show you. Sometimes I don't. But in all reality, guys, just through understanding the course material that you guys have taken, it's pretty easy to identify this when you've looked at the analysis that we said. We're going to give you these same levels. We're going to give you these, trade ideas, quote unquote. But really, it's just the analysis. So you can see the areas of interest we're looking for, and then the explanation as to why we're looking for what we're looking for. That's how you learn. You don't learn through signals. You don't learn through handouts. People who have taken signals, and guys, you can ask yourself this question, how long, if you have taken signals in the past, have you been profitable with them? Are you financially free right now? Are you doing this full-time taking signals? Are you a full-time signal taker? 99.999% of people will say no, right? So it just doesn't work. You got to learn the skill in order to do this full-time. Same with me. Like, I'm not going to be around forever. So If you guys don't learn how we trade before we, stop doing this, which I don't have any plans of stopping anytime soon, but, I'm not going to be around forever. If you're constantly just waiting for me to give you areas of interest so you can trade from and never learn it, well, then when I finally am done, you won't have the skill. And the skill is the most important thing. And it just takes determination, guys. It just takes focus. It just takes time. Okay. You're not going to become rich doing it the easy way. Try to go win the lottery if that's what you want to do and have your chances there. GBP NZD. So with GN, we are looking for continuations short. The counter trend is still bearish, right? Yes, we are still bullish higher time frame. I'm just not sure when and if we're going to stop anytime soon. It's really just in a weird place. This is an area of demand that we could react from. So if we see a reaction long and we actually break this entire counter trend, then great. That's a huge confluence because we have the huge sell to buy, repricing, demand, higher high. So if we can break structure, this would be a great opportunity to buy it. Very highly probable. However, like I said before, continue to trade with the trend until it breaks. We still are extremely bearish right now, right? Price could easily just continue. We'll just see. So lower time frame, obviously we still have to build confluence around our setups, but we can still be taking opportunities if they arise. So we can see, lower low, lower high, lower low is just an overall pullback, lower high for a lower low again. 1 touch, 2, 3, 4, essentially 5 right in here. That last touch, 5 touches. People are selling with this trend line. Oops. Price makes a move to the upside, sweeps them out. They lose again. And then price falls to the downside, coming into this level of supply here. Supply was mitigated, lower time frame. Right in here, lower time frame, lost buying volume. We shorted off, we pulled back, we mitigated that level, and then we made a move to the downside again. So I have this level in here because this is just one expansion, and maybe we can have a pullback into premium price for continuations. So I have just this repricing event here because we have high, low, high, low, high, low, failed to make a higher high, lower low. Yes, we've already kind of mitigated that, but if we come back up again, I'm not treating this as, oh, we've already mitigated, now we're probably going to go higher. No, we're still bearish, so we could come up again and hit it. So that's really what I'm looking for. So around, 1.924850 or 1.9250. That would be a good price point. If it doesn't come up into that level, then we'll just sit on our hands and wait. GBP USD. So with GU, we're let's see. We're kind of just stuck at the moment. We have a trade down in here that's still running. We just missed our overall take profit by 50 pips or so. But stops are moved to break even. Partials have definitely been taken. Once we've created this swing point here, partials have been taken. And then in here, you can see that we have overall levels of supply right here. It's a level of supply you could take partials from, right? That's exactly why we had a reaction from. So now if people aren't taking partials at the right levels, well, then they're missing out on a lot of money. If you're taking partials right in here, then you're taking profit too soon. If you're taking partials up here, you're taking partials, too late, or you're not taking partials at all. You got to understand the valid levels and the key levels of the market. This is the level of supply over to the left. So you just take some partials. If it continues, great. Then you're making more money. But at least, if price goes like that, then you can be confident saying, I did my due diligence and I understand, that was an appropriate level. So it's not just about the entries, guys. It's about trade management as well. So trade management's key. I did make a video. I think Cam titled it the 2 components of smart money that I don't remember what the title was, but if you go type in trading nut 2 components on YouTube, it should come up with my video. I teach about scaling in and trade management. All right, so we're still bullish. Higher high, higher low, higher high, higher low, higher high. We're probably going to make a lower low here from this low. Doesn't mean we're overall bearish now. Just means we may be experiencing a deeper pullback before continuing. We can see here this sponsored move that swept equal lows, huge sell to buy. We could still be trading off of this level here, right? These levels. So obviously these two would be half risk apiece. The start of the sell to buy and then the lower time frame demand. We're just continuing with the trend. So this risk to reward in here is this trade. This doesn't mean that I'm getting in here from this blue box, and we're already in it. We're already in it from right there. Okay. So now that we understand that, we could be coming lower, right? The dollar is a little bit strong right now. We've come into higher time frame levels across the board. Remember AU, GU, EU, we've come into these levels and we're starting to move away. So we're break even on this. We just missed our break even marker, or stops at break even, which will be hit on Sunday. So that's okay. We still did make some money on this trade as well once price came back up and hit this level and the secondary supply level. So a good amount of partials have been taken off, almost the entire position. We're leaving like a third of a position left. So we could be, hedging our position short. Counter trend, high, low, high, low, high, low, high, low, high, kind of lower low, failed to make a higher high, lower low, right? So this area of supply could be good for shorts into our overall level here. That could be an opportunity. So if we have equal highs, that could be a run. So we're looking to short from this level. If we get a sell-off, great. If not, then we have our buys from down in here. So sells 1.228, buys from 1.203 and 1.1964. All right. NZD USD. The only thing I have, guys, on this is just sell side liquidity, looking for continuations lower. I think Aiden may have said something along the lines of that level here. I don't know. I mean, it's not that highly probable. I mean, we still are, bullish overall. I'd probably be just waiting for the pullback into our higher time frame levels to continue. I'm still looking for 671 overall. We're still extremely bullish. Let's look at the structure, lower time frame. You can see high, a low, a high, a low. I mean, yeah, this is a high and a low and a high and a low. I mean, yeah, we could, this is a high, low, high, low. We're still maintaining bullish structure. We haven't closed below this level yet. But either way, even if we do, I'm treating this as more sell side liquidity to continue. So imbalance in here, we have lower time frame demand. We have lower time frame demand in here, and then we have that level in there as well, that repricing. So 6,250, 624, 350. I'm still interested in longs. That's really all I have for it at the moment. USD CAD. So USD CAD, and this is where we are hedging our positions. You can see, actually go back down to the lower time frame. We have multiple trends that are just not in alignment with each other right now. We're in a bullish market on like the 1 hour, 4 hour, whatever. It's the lower time frames, right? We're in a bullish market. Okay. Zoom out. In this case, we're in a bearish market. Lower low, lower high, a lower low. Could be a pullback for a lower high into supply for shorts, into a higher time frame demand. 3, 2, 1, because we're in higher time frame, higher high, higher low for a potential higher high. So we'll just have to see, higher time frame, we're bullish. Lower time frame, we're bearish. And then lower time frame, we're bullish. So it's just really weird right now. So I am hedging my positions. Where am I doing that? Well, I'm doing it from 2 levels. I did it from here. There's a lower time frame supply like right in there. Okay, we got a really great entry. Price came back down into this demand level in which we bought it from. So we hedged ourselves with our buys. Stops moved to break even on the sells. Obviously, we came back up, hit our stop loss on the sell. So stops at break even there. We did take some partials, so we just made a little bit of money, but not as much as we could have made if it sold off, obviously. We had another level up here that we haven't quite hit yet. So I will be looking to sell here because we could still maintain our bearish structure in here. That's definitely, something that could happen. So we'll be selling here. If we go long, whatever, I lose on the sells. I don't care because I'm in from the buys here and from buys in here. If we short off, at this point, because if we come into this level and short off, because of the fact that we would make a higher high from this level, stops would be moved to break even here, and I wouldn't lose on this trade. Partials would have been taken. Same with this. Stops are already at break even, partials taken on this because we made a higher high in comparison to that swing point, right? So let's just say, for instance, that no stops were moved to break even, no partials were taken, price came into this level, and we sold off, right? Well, let's just say we treated this as, 1% and then 1%. Let's say we will lose on these trades, just for instance. So 1 + 1 is 2. 5.5% minus 2% is still 3.5%. Aggregate positions would still be in profit. So hedging is good if you know how to do it right, and if you know the higher and lower time frames are not in alignment with each other. So had our entry from this area of demand. Low, high, supply. Failed to make a lower low, higher high. Supply flips to demand. Beautiful entry there for buys. We were in sells, got stopped out, break even on the sells, in on the buys, making really good money. Higher high was formed. Overall pullback. We have this overall swing point here, which is in the imbalance, and we have the lower time frame demand. So I had 1 and 1. Beautiful wick entry. We're coming up into our first area for take partials, right? Because you got to take partials at levels in which price could potentially reverse from you. And this is a level in which we're actually hedging with sells. This could reverse from me at this point. So partials would be taken at this level for our buys, right? Not only for these buys, but for these buys as well. All right, we swept by the sell side liquidity, excuse me, buy side liquidity. So 1, 2, 3, 4 descending liquidity. We could go like this and like this, potentially. So that's why we have those levels. Just be careful if you're not already in buys. I mean, you can still trade those sells, but you're not already hedging yourselves with buys. So if you lost on the sells, you would lose. We would still be profitable because we're still in these buys, but just be careful there. USD Swiss franc. So with USD Swiss franc, we have kind of come into a higher time frame level. So this is where we just have to be careful. In this case, we are looking to hedge our buys with potential sells because we still are extremely bullish, right? We're making higher highs and higher lows. We have come into this last point of return. This is the low that generated this huge push up, right? So this isn't really a swing point to make a higher high. This is all just kind of one swing point in my opinion. So this is just an overall pullback, I guess you could say. So we've come into that last point of demand. You can see there's demand in here. It's better seen on the lower time frame, but for the sake of time, I won't go into it. Higher high, higher low demand, higher high, higher low, reaction off demand. Great, made a higher high. This doji candle, we had our last point of demand in here. That swept lower time frame liquidity right in there. So we've come into that level perfectly, and we're starting to see the reaction. However, we're still technically counter trend bearish. We have a lot of buy side liquidity, equal highs, 1, 2, 3 touches of this trend line. We could go easily run the liquidity and short off again to continue with the overall bearish momentum or bearish trend. So we're still bearish here, lower low, lower high, dollar still weak as of right now. Lower low, lower high, supply in here at supply level, and we've made the overall lower low. So this is the range. From this high to this low is the range. Just one range. So we can have a pullback. We could sell it from that supply level to hedge with our buys that we're currently in on. So we could short off from that level and go short to continue with that structure. However, you know, we are buying a lower time frame from here because we've come into a higher time frame level as discussed before, and we have broken structure, counter trend. We have confluence for this. So this would be, you know, this doesn't mean that just because we've come into the level and broken structure on a lower time frame doesn't mean we necessarily can just take buys and take profits like way up in here, way up here. I would still maybe look to take partials right in here because yes, we've broken counter trend structure and had institutional confluences, which I'll go over in a second. But this could just still be like lower low, lower high, lower low, lower high. So we're buying in here until this level because we could potentially short off from this lower time frame trend. That's why the partials from here would be appropriate. But if price does actually break and go long because we've come down into this higher time frame level, that could also be the case. So if I scale in, let me go down to like the 5 minute. I think that's maybe the 10 minute. That one might be prettier. So in here, we can see we made a low, we pulled back, made a low again, pulled back, came down, failed to make a lower low, swept liquidity, made a higher high. In that process, we've created our kind of repricing or like this demand level. We have also imbalance in here to straight buying volume. So when we broke this swing point high, I thought, okay, well, maybe we could be in for some sort of overall retracement, either up into here for the overall shorts, right? I'm not selling from here because we have a trend line above. So that most likely that trend line will be taken. But just in case we come into that level and short off, partials will be taken. But we've come into the higher time frame level, so I may look to just take profit up there as well. Overall take profit is up there. So we mitigated that demand, and then we went long. So let's just scale back out to like the 30-minute. Maybe we've made another higher high. So high, low, higher high, higher low, higher high. If we get a pullback, I may be interested in this level of demand, and here stops below this low. That could be good. Overall pullback into discount, potential longs, possibility. We'll just see how we react from that supply level in here. So it's an opportunity. Just helping you guys understand, structure and liquidity concepts within structure and stuff like that. All right. NZD Swiss franc. So very similar to GBP Swiss franc, we have NZD Swiss franc. So overall, actually, let's just go to the higher time frame. Overall, we're still bullish, right? Higher highs, higher lows. Higher highs, higher lows. Looking for a higher high all the way back up into 6.2. This is an appropriate take profit because on the daily time frame, we can see that really this is a huge imbalance. This is our last sort of supply level, about the last buying volume before we broke structure here, right? So our last buying volume before we made that lower low in the market. So imbalance in here, supply in here, 6.2 psychological level, that could be a possibility. And we can see we came into that daily 50 EMA. We're still counter trend bullish, so we still need to be looking for longs. And we can see that this sell candle was completely, taken out by this huge engulfing buy candle. We swept equal lows, lower time frame. So this is a good indication that we're probably going to continue long. So let's scale in lower time frame. Let's look at the trend. Okay, so yes, this is a high, this is a low, this is a high, right? But intermediate structure, we have high, we have a low, we have a high, we have a low, high, low, high. This is not a higher high, even though when we were buying in here lower time frame, we had an opportunity in there, if you guys remember from VIP. Once we took out the swing point, partials were taken, stops to break even. We didn't close above it, but still, I would consider this a higher high in the sense of me moving stops to break even and taking partials, but this is not really a higher high. We never closed above it. So this is still the range from this low to this high. This is still one expansion. This is just one pullback. So understanding that when price is falling, where could we stop and continue with the structure? Well, let's see. Well, we had these two levels. So quickly, higher high, higher low, equal lows, sell to buy, reprice, continue. We had, I believe, another level in here, like one that you can't see. I think it's on like the 15-minute, but there was another supply level. So 0.5% risk, 0.5% risk. Just came into the first one, sweeping buy, sell side liquidity, sell to buy into our first level, hit overall take profit. Higher high, higher low, higher high, looking for a pullback for a higher low, for another higher high. Came back down into the mitigation. That was the sell to buy on a lower time frame. There's a sell to buy candle. Obviously, this is a higher time frame, so it's just a wick, but we know a wick is selling and buying volume at the same time. So that was the mitigation. Got a beautiful entry. Take profit was swiftly hit. Okay, so again, counter trend again. Low, high, all the way down. Pushed up, repriced. This is lower time frame demand, higher high. Never mitigated that. We just continued. So that's our higher time frame level of demand. So that's exactly why we took that trade from that level. But we also had other opportunities. So on a lower time frame, there was a equal lows here. This wick, you see that wick, clear sell to buy. And then there was like a demand in here that we came into nicely, but then we never continued with this lower time frame trend that we see. We could have easily just went like that, but we ended up having a deeper pullback. So we had other levels, right? So just because, the concepts were there, right? That's why we're trading. We're not just trading it because it's lower time frame structure. We had equal lows. We had a sell to buy that swept liquidity. We had a higher high. We just thought that maybe price would just continue with this lower time frame trend, and we could have easily have done that. I didn't know that we were going to get a deeper pullback. We just have to trade what we see. So if we do have a deeper pullback, we can be prepared with higher time frame levels. We had a higher time frame level of demand in here, and then our overall demand down in here, because we know that even though these are lower time frame swing points, this is just one expansion, right? Because we can still get a deeper pullback. Doesn't mean we're bearish if we break structure. Yeah, we're bearish lower time frame, but we're still bullish higher time frame. It's just a higher time frame retracement for a higher high. Okay, so had this level in here, had a great entry, and then we made a higher high. We wicked it so that we put partials to that level. So we entered at a wick entry and put our partials pretty much at a wick take profit, essentially. We were holding a little bit of our position, but obviously that got stopped out at break even when we came down and had a deeper pullback. But we can see here, we created more equal lows. So the higher time frame now says, okay, now this level is we're looking for a price to come into. And we had this huge sell to buy. Lower time frame, we had a clear lower time frame schematic. So accumulation schematic within here. Let me try to go to a lower time frame maybe. And then at that point, we can maybe pull up the VFI. Let's see here. So no divergence. That's okay. We don't need it. Obviously, price still went long anyways. If price pulls back, let's see. I'm actually just looking at this now. This could be a potential level. That would be a deep retracement, but that could be a possibility. I mean, sweep all this low resistance liquidity. Go like that, and then that could be a start of a trend. We come into a higher time frame level, make a higher high, could have a higher low, and that's where we start a new trend to the upside to create the expansion. Expansion, pullback, expansion. So that's an opportunity there. I didn't see that, so let's see where that is. 59036. Yeah, somewhere down in there. That could be an opportunity. We've accumulated, could pull back into the test of the accumulation where we've expanded to the upside. So that's an opportunity. But we're still in these two trades. And remember what I just did here. Same entry, same take profit, different stop losses. Why? One was because this is not the best risk to reward. I mean, it is a 1 to 6.9, so it is a good risk to reward. But the stop was had to be below that low there. So that was one trade. The second trade was just below the demand level here. I said you could do it either way. So this is obviously on half risk. So what we can do here in this case is we add up the risk to rewards for each trade. 6.89 plus 17.22 gives us 24.11. So we divide it by 2. So the average risk to reward for both of these positions is 12, 1 to 12. So if we go long and we hit our overall take profit, we would make 12% on this trade cumulatively. So that's what we could do to kind of help, mitigate some risk, but, still be in the overall position if price ended up, coming down, taking out the previous low of the demand, but still maintaining our bullish structure. So potential re-entry from that level there, have that level marked up. All right, just a few more guys, then we are done. Okay, GJ. So GJ has a potential, hedging opportunity here as well. Higher time frame, it's tough because we're kind of just consolidating right now, but we are still overall bullish, right? We made a high, we made a low, we made a higher high, we made a higher low into demand, sweeping equal lows. So we're looking for a higher high now. So we're still looking for bullish runs. So we've made a high, we failed to make a lower low. We've kind of made a higher high. So we could be looking for a pullback to make another higher high again. So this would just be a lower time frame trend maybe in this higher time frame expansion, pullback, expansion, pullback, expansion, right? This is the high that made this low. So this would just be one expansion, but a lower time frame trend opportunity to make that expansion, right? You guys, understand that market structure there. So where can we be looking for longs? I am looking for one from 164.8. Stops obviously below the low because this is where we broke structure. Low, high, low, high, low, high, low, and there's a lower time frame demand in there. That's if we have a deeper retracement. But that's really all I see. I don't really see anything else for this kind of demand in there. Last point of return type of trade. We do have equal low, so I do think we can come lower, potentially buy it from there, but also potentially look to sell it if we are actually going to go short with this. Because we can see across the board, the yen is a little bit, I guess you could say, kind of strong right now. CAD J is pushing short, Chef J is pushing short, I believe. So it could be in for sell side. We could come lower. We'll see. We do have, I guess you could say, maybe this trend line here. I don't know. People looking to take trades off the trend line. We may have potentially, if there's an opportunity, we may have a deeper retracement before continuing higher. We don't know that. So we're still going to continue to trade bullish. But what we did do was we distributed. See distribution, very discrete, higher highs, higher lows. Then we broke very strongly. If I pull up the VFI, in this case, we do have divergence. Volume is diminishing, price is rising. All right, good indication of a potential reversal. So this black line I have here is the previous swing high. You can see this push up where we started to distribute, took out that high, and now we're making a move to the downside. So we'll see what happens. I mean, right in here, I guess the test of the distribution was right in here. We filled some imbalance as well. So we came up into that. We failed to make a higher high and instead made a lower low. So we could be in for some sort of pullback for another move to the downside, at least maybe into here. So maybe kind of hedging our shorts with buys with shorts, whatever you want to call it. So let's see here. We have a couple opportunities. We have two. So our first one, I'll actually go to lower time frame. I think it's 15-minute. Yeah, I mean, just to continue with the lower time frame trend, you can see low, high, low, high, low, high, low, high, low. Just could come back up into this supply zone, selling volume, also imbalance in here, and could fall, stops above the high. This high actually came into supply in here. So just could continue with that trend. Take profit would obviously be down there. Secondary entry is if we have an overall pullback. It's probably best seen on the 4-hour. Low, high, low, could have a deeper pullback for a lower high, for a lower low. So it could look like that. We can see in here, you can see that doji candle right there, or this selling volume candle. These two candles were the last buying volume in here before the sell-off. So we could come back up and test that and then go lower. Still would maintain the counter trend bearish structure that we're seeing. So it would be 0.5% risk on each. 0.5%. Could be some selling opportunities in that structure before potentially coming into a higher time frame structure there for potential buys. So we'll see what happens. USD JPY, I don't really have much to say on this. I still think this is valid here. We're in a downtrend currently. Lower low, lower high, lower low, lower high, lower low. This is just an overall pullback in my opinion, possibly for another lower low. So we can see it here, descending liquidity, 1, 2, 3 touches, buy to sell. That's an unmitigated sponsored move. And we have imbalance here as well. So a big buy to sell. We're just kind of pulling back. So I wouldn't be surprised if we came back up into this level of supply and then fell potentially. That's what we'd be looking for because we still are bearish overall. We have to trust the structure. If price ends up breaking, if we actually break structure, well, and if we deem this appropriate for potential buy opportunities, then we'll see this as high, failed to make a lower low, higher high, could look for another pullback into demand for a higher high again. We'll just see what happens. I'm not going to make too many predictions right now, but we'll just start focusing on this level. And if price breaks, then we'll adjust as we go. Not too much there. AUD NZD is a little interesting. So I don't have a setup on this at the moment. However, I wanted to show you higher time frame trend. So if we scale out, what do we notice within here? Well, currently, I guess you can say, and it's tricky because, yeah, you could classify this as a higher high, a higher low, and a higher high for a higher low and a potential higher high, potentially. But also, we've also swept all of that liquidity. 1, 2, 3, 4, 5, 6, tons of liquidity. Could we continue short? Potentially, because we still are higher time frame in a downtrend. So it's just a little tricky at the moment, but we are coming into some sensitive regions of price. So I'll first talk about this. We had that low there from 2015 that we took out. You can see obviously that liquidity run. In the process of doing so, 1, 2, 3 touches, attracting buyers with this trend line, started to push up. Then we had the sell to buy. So within that, we had a counter trend. Low, high, low, high. We came back up into that supply level here, this buying volume. We retested that, started to go short, and then made the higher high. So that's the repricing. That's the demand. And we can also see with the breakout traders, people are trading short upon the breakout of this trend line and also trading the break and retest. Break, retest. That's why they're shorting. Nope. they lose again. So then we ended up making a higher high. We pulled back, took sell side liquidity, came back down into that level of demand. And that's where we stopped. And that's where we started to make a higher high again. So higher high, higher low, higher high. That was a perfect level to take off of. That's obviously a higher time frame, but we could have also, looked at this from a lower time frame perspective and be like, okay, well, we made a low, we made a high, we made a low, we came into that level, we made a high, failed to make a lower low, we made a higher high. So this is really the overall demand level. However, lower time frame, this is the last selling volume within here that failed to generate a lower low. Came into demand here, reacted, broke this counter trend structure, higher high, pulled back, failed to make a lower low, higher high. And I bet you at that point, you could probably look to trade it somewhere in there because we've come into the higher time frame level. We've made a high. We pulled back, had the counter trend. So I'm going to do bar replay here. I'm going to go to the 4 hour. And we've had this demand. So we came into the demand. We're technically still bearish in here. We could have easily made a lower low, right? But we stopped. Reacted off the demand that came and reacted off the higher time frame demand. And we broke and made a higher high. So where could we have looked to have traded this if that was the case? Well, there are a couple of demand levels. There's one in here, and then there's one in here with that candle. So two of them, one, and then two. Boom and boom. So could have had either one of those. But anyways, what I'm trying to say is now this becomes our last selling volume that failed to make a lower low, and we made the higher high in the higher time frame. So going back out of bar replay, let's go to current price. We're finally in this region of price now. We are still very heavy to the downside, however. We've made that higher high. We've made the higher low. We're coming into our last point of return. So I'm actually going to mark off this level, and I'm going to mark off this level here because this is the low of the last selling volume. So we really shouldn't be pushing lower than this, but technically this is the low that produced this high. So I'm going to have that low there as well. So we'll monitor price in this region in here. We're in a higher time frame level, so continuations short. If you find a short opportunity, I wouldn't say is risky, but it's not as probable as if we haven't come into this before. Meaning, if we were trading short in here, that would be more highly probable because we're in a downtrend and we haven't come into objective. But I mean, if you find an opportunity to short this, whatever, it could still work out. I mean, we're extremely bearish here. We could easily continue lower, deeper down into the demand. But we'll see. We'll wait for some sort of price action. What I've also noticed in the past, and this is just through experience, is that if price goes like this, not only would this be a break of structure, but we also have additional confluence. And what do I mean by this? Well, we can see a low, we can see a high, we can see a low, we can see a high. We've created equal lows, and then we broke structure counter trend. That may be enticing for buyers. We had the fake breakout. We came lower, we came higher. So it's almost like taking buy side liquidity, enticing buyers for breakouts, coming lower, taking the stops of the buyers, also attracting sellers below the breakout of the support. They sell. If we go long, then we take the stops of the sellers in here who are trading below these lows. They're probably placing their stops above the high. And at that point, it would be an institutional move. And then that would be extremely, extremely highly probable if we get a pullback to go long. That would be an extremely highly probable long opportunity upon a pullback. So that's what I would be looking for. I don't currently have anything now for continuation short. I mean, if you really wanted to, you could see this as, sweeping liquidity, huge buy to sell, reprice continuation. There's also mini demand in here, but we also have a supply in here, but there's also supply in here because you can see if I pull my handy dandy, I'll just go like this. I'll make it pretty. Okay. So really just taking descending liquidity here, big, huge buy to sell, counter trend. I guess you could say this is where we reacted off the trend line, pulled back, high, low, demand in here, failed to make a higher high, lower low. So that will turn into supply. Also a mini level of supply in here as well. So if you wanted to short this, I mean, those two levels, in my opinion, are valid. I would classify those as valid. But just be careful if we end up breaking long. Well, fine. Maybe you lose half and half. Maybe you lose 1% if you want to trade that short. It's not a bad trade. We're still extremely bearish. And that would be a very valid setup, in my opinion. But if we do end up breaking, because obviously we have to continue to trade with the trend until it breaks. Continue to short it until it breaks. When it finally breaks, finally you lose one trade, whatever. Then we look for the pullbacks into demand, and that would be extremely highly probable for that to occur. So even if you lose on the shorts and you win on the buys, I mean, your wins on the buys are going to be way better than, or take way more precedent over the shorts, meaning those wins are going to outbeat the losses that you took on the shorts. But I'm not saying we're going to go long. We're still in a downtrend, so we'll see. Last one, AUD Swiss franc, and then we are done. I'll take some questions, and we'll do this giveaway. So, daily time frame. What are we doing? We're bearish, right? Where's our objective? Well, we have, I don't know what the heck, why it was extended all the way over, but anyways, huge sell, huge buy. This is a little lower time frame demand or repricing. So I want to get back down into that level. So that's our objective for shorts. We're in a downtrend. We need to be selling until we at least hit 0.60. And look at how that psychological level lines up pretty much with that area of demand. So very highly probable. Daily time frame 50 EMA, we're still below, looking good for continuation short. Remember, when we were trading in here on the 2 hour, remember we had, lower low, sweep liquidity, lower high. Lower low, sweep liquidity, lower high. Lower low, sponsored candle, that swept liquidity right there, that buy to sell. This is the high that created this low. We were not going to come above that high, and we did not. We did not come above. We never touched that black line. So this is still a lower low. All of this is still a lower high. It's all just, price action, overall lower high, and then we finally made the lower low here. So we finally made the lower low. This is all just one pullback, guys. All just one pullback. So you just have to understand that from a higher time frame perspective. So we distributed, made the distribution. This high was taken out by that high. This high was taken out by that high. This high was not taken out by this high. This is the failure to make a higher high and the break of structure. So now we are not going to come above that high there. That's just, kind of how it works. So just based upon market structure, this is demand. We came into demand, right? We had the reaction, demand failed. We never made the higher high. We made the lower low. So all of this is one supply region. But in the process of pulling back into that supply, we kind of started to just consolidate. So we never made higher highs or lower lows. We never made a lower low as expected. So we just kind of consolidated, building liquidity on either side of the market, buy side liquidity and sell side liquidity. So we ran buy side liquidity coming into this overall supply level. We just came into like the last point of return. There's a lower time frame supply in here. Also, there's imbalance, a straight selling volume in there. So we filled that imbalance, came into the supply. We can see we never took out that high. We maintained the structure. We actually distributed lower time frame in here. I think on the 30-minute, we can clearly see the candle. So what do we look for when price breaks? We had the reaction. We broke to the downside. The counter trend says high, low, lower low. We pulled back for a lower high, for a lower low again. So we sold it from this supply level. Wick entry. This is how we can take it from a top-down analysis perspective and have confidence in our areas. And, it's why it's nice when you're trading smart money. If you know really what you're doing, you probably want a brokerage that has tight spreads, because you're going to have wick entries like this all the time, just like we had here as well. But anyways, we made a low, we kind of consolidated, and we made a lower low again. So this is all just one expansion, one pullback, one expansion, one pullback. So the person who asked about supply and demand levels, that would be that supply level, right? It's that last buying volume before the sell-off. Before we came into that demand, we reacted, failed to make a higher high within this high, low, like pullback sequence before making a lower low. So that will turn into supply. It's also kind of like a consolidative period, right? Consolidation before the fall. So we ended up pulling back. And this is where, like I said before about psychology, don't try to catch like the 1 minute time frame candle and try to have a 2 pip stop with a million pip take profit. You don't need to do that. Just trade the market as we see it, right? Entry is from here, stops are above the high. Okay, let it do its thing. If it hits stop, it hits stop. Oh well. If it doesn't, then great, you're making money. As long as you have good risk to rewards. So in this case, this is a 1 to 10.8, almost a 1 to 11. Take profits are overall at 0.6, which I do think we'll come into. This is a 1 to 6.78, so almost like a 1 to 6.8 essentially. These were two different trades, right? So this was still 1% and this was still 1%. The only way that we would split up our risk is if both of the trades were two different levels of the same expansion, meaning if there was another level like right here that I wanted to trade from, I would go half risk and half risk. Or like another level here that I wanted to trade from, I would do half risk and half risk. But these are two different trade setups, right? This is just one trade. We made the lower low, and then we had another trade opportunity. So another 1% risk. So I am in my quote unquote full risk there. So we ended up having a little bit of drawdown. Oh, well, we still maintained our structure. We just had a little bit of a pullback, right? High, low, high, low, high, low, reaction off this overall demand level, failed to make a higher high, lower low. So we finally broke the structure, and we finally made the lower low overall. Price will load overall to the left here. We finally closed below that level. So we finally made the lower low. So now we can pull back into supply again. So in here, you can see that this was the level that we failed to make a higher high with and made the lower low. So that will turn into supply. Stops will probably have to go. What's tough here, because I don't want it to be too large of a stop loss. You could either place it above that level or above the swing high. But conservatively, you'd want to go there. But for risk to reward purposes, right here wouldn't be a bad thing either. So either way, that's my level, 6314. And then I also have 6.3 because it's a psychological level, and it's kind of where we had the last buying volume, like the last swing point. You can see high, low, high, and then the lower low. So the last buying volume before the short off, just in case we don't pull back that far, we may just come up into 0.63 and have a fall, something like that. So potentially two positions, half risk and half risk you could do. So yeah, that's pretty much it, guys. That's all I have for you guys today. I know that was a very long live session, so thank you for sticking around for everyone. I really appreciate it. This was our last live session of the year. Feel free to go back and watch all the recordings of all the live sessions from this year. And these lives are probably about 2 hours long. So if you have some time, if you want, extra education, if maybe you want to take the remainder of this year off and not trade like we're not trading, probably is smart. But if you do trade, you definitely use good risk management. And maybe you could take these next couple of weeks as time to, further your education in terms of, going back, watching these recordings, watching, our YouTube videos, and just preparing yourself for 2023. Also, if you want to get a step ahead of the game, if you want to take it even a step further, we have our exclusive mentorship program available, and we are running a current promo that I'll talk about here in a little while. And this could also be a good time to get soaked in with the course material while we're not actively trading, so you can get the proper education and learn exactly how we approach the markets from a pretty much like an A to Z step-by-step perspective. And you can take that time to really soak in that information with the courses before we start back with trading in January. So that could be an opportunity, and if that's something you're interested in doing and taking your trading to the next level, feel free to head over to my website, arielfxtrading.com. Book a free call with me. I'd love to talk to you about how we can best help you, and if we can even help you in the first place. If we can't, then at least that you don't have to spend your money on something that won't help you. But if you want to take it a step forward, and we do feel like it's a good fit, we would be more than happy to extend that invitation for you to join, and then we can get you onboarded there. So let me do the giveaway really quick, and then I'll go over the last questions, and that's it. So the giveaway, it's funny because I came across, and I'm sure you guys probably know the video. How you guys know Oprah? I'm sure you guys know Oprah. This is probably really cheesy of me, but I'm going to do it anyways. Oprah was like in a Christmas special, I believe it was. I think one person won a car, and she's like, oh, you all win a car. You win a car. You win a car. You win a car. So the giveaway is not just for one person. It's for everyone. Everyone wins the giveaway here. And the giveaway is only for people who are on this live session. It is not for anyone else. So thank you guys for taking the time out of your Saturday or Sunday, wherever you are in the world. You all win this giveaway. What I'm going to be doing is offering you a discount I've never offered before. And you remember, guys, I don't like to give handouts, which is why we don't do signals. So the giveaway is not for people who, just want signals and stuff like that. It's for people who really want to learn the skill. So it is already the giveaway is a discount on our services. It's just a large discount. For those of you who are already a part of our service now, send me a message and I can do something special for you. But anyone who is new and who wants to really learn the skill, I'm offering you double the promo offer of what we're currently a part of now. So we're currently running a 20% off promo for our entire service. So you get, full education, one-on-one mentorship, lifetime access into our Discord group where we send trade ideas and analysis every day. We're going to double that to 40% for you guys. So trying to help you guys out this holiday season, allowing you to take advantage of that. But the reason why I'm not doing a giveaway in terms of just giving you guys money or whatever is because, at the end of the day, what's money going to do for you? I mean, I can give you guys, $100 and do a giveaway or $500 or whatever. But at the end of the day, wouldn't you guys rather have the skill instead of the, a quick $100? I mean, that's just my perspective on it. So instead of giving money away, I'm going to do, a larger discount for people who really want to learn. So if that's something that, you guys want to take advantage of, send me a message. I'll be happy to get you on board. For those of you who already are a part of my Discord, our mentorship program, obviously you guys have already paid for the service, but I'm going to still do something special for you as well. So send me a message personally. And I'll figure something out. I'll help you guys out there in that sense. We'll do something special for you. So I'll drop my website in here if you want to take a look at it and just to see what we're about, what we do, what we offer. And I'll also drop how you can get in contact with me to take advantage of that as well. So hopefully you guys understand and appreciate. Give the whole program for free. Oh, I can't do that. Gotta respect my value here too. We do put a lot of time and effort into what we do. So also put in my Telegram. If you got so many questions at all, even if you aren't even a part of my mentorship program and just have questions about trading or psychology, whatever, feel free to message me. I'm always going to be here to help. I'm not going to be that person and be like, oh, you got to join my group in order to get help. No, I'm here to give back to you guys. That's why I do this for free anyways. Let's see. Okay. Any questions you guys have? If you guys are good to go, have a great rest of your weekend and happy holidays to you all. Merry Christmas. Have a great and safe new year. We will speak to you all in January. So thank you guys so much for a great 2022. We're going to come back and kill it in 2023 as well. So yeah, take care, guys. Have a good rest of your day. I will stay on for a little while longer, answer some questions if you guys have any, and then we'll call it a day here. All right, let's see what we have. Okay, so yeah, Jacob, if you're still on, I'm going to answer your question as I told you before. How it looked your daily journaling. Do you still use pen and paper or Excel? So as I've already, I'm still a student of the game, right? I'm still someone who is obviously still refining my craft, right? Even professionals are still looking to learn. There's always going to be something to learn. However, I've gotten to a point where I don't need to really journal anymore. I've already gotten to that point where, my trading is the same. I've already mastered the skill set. I have the good habits in place. So, but for people who are not there yet, yes, journaling is definitely important. I would definitely recommend, paper and pen or Excel, probably Excel is probably easier, jotting down, if you're looking at entering into a position, this is what I used to do, maybe create a PowerPoint presentation. Take a picture or a screenshot of the before analysis, what the trade looks like before. Jot down what you're looking for, why you're looking for it, all the confluences associated with it. Price comes into your level, then you post an after screenshot. So you have a before and after. If the trade wins, great. You can go back and review your confluences for further trades and understand why that trade worked out versus maybe ones that don't. If that trade doesn't win, maybe go back and understand, kind of why it didn't win. Maybe if you were trying to buy it and price just completely shorted off, well, maybe, the original high came into something else that created a lower low instead of a higher high that you were looking for or something like that. So you can kind of go back and learn from it. It's kind of funny because I created a journal about 5 years ago and, it's funny, after 5 years of experience, just going back and, just for craps and giggles, going back and looking at my journal, and it's just, I kind of laugh at it because it's kind of ridiculous markups. And because I was a beginner trader, I didn't know what I was doing. And it's just kind of funny how I was using trend lines at the time and all that stuff. But, you'll start to really see some progression if you keep journaling. It's definitely a good habit to get into. Definitely helps you learn from your mistakes. Let's see. You're a lucky one because you found out about this method on the get-go. Yeah, that's true. I mean, I've done so many different things, guys. When I first started trading, I was in, so many retail groups. I mean, I was probably a lot like you guys. I mean, I started somewhere too. I was hopping around from group to group looking to see what I could do, and I didn't have the right mindset. I was trying to get rich quick and making a quick buck, but I was going from, trend lines and fibs to, indicators to chart patterns and breakouts and all that stuff. And it just never worked. And until I met my mentor, I was lost. And when I finally met him and he taught me the real way in which the markets move, because he was an institutional trader for 2 decades, and that really opened my eyes. And now it's just, this is really, in my opinion, and this is my opinion only, which I don't know if it probably is facts, but I think it's really the only way of going about trading. I mean, I'm sure there are other strategies that maybe don't have to do with smart money that you can probably, get enough experience to formulate a strategy to make it work for yourself. I'm not saying that other strategies are wrong by any means, but I just feel that just through my experience, this is really the most applicable way of going about trading. But just my opinion there. Oh, let's see. Ariel Fx is the real deal. The strategies you learn in the community are legit. They apply in FX, metals, and even stocks. Take the time to learn the strategies and don't shortcut. Exactly. Couldn't have said it better myself, Matthew. Good to have you on, by the way. I do remember all you guys. Don't worry about it. I do remember you. Let's see. Not lucky, just trading almost a year now, wanted to learn it and putting time and effort into it. Yeah, that's just what it takes. I mean, at the end of the day, it just takes time. It just takes practice, just like learning anything, right? You're exactly right. How do you find your entries with smart money? Well, it's kind of what we've been discussing through the entirety of the live session. It's that, again, that's one of those broad questions that can't really just be straight up answered. It's kind of, you just have to learn it through, you can learn it for free through my YouTube videos. I don't go into so much depth in my YouTube videos, but if finances are a problem, then yeah, you have those YouTube videos for free. I also have videos in the Trading Nut YouTube channel. But if you do, have the financial means and want to really forge your education and really learn, the right way, our mentorship program goes through everything step by step, from our courses to our one-on-one sessions that you'll have with me personally to my VIP Discord channel that we break down charts with. You'll get to know it. It's not just one way of going about entering using smart money. There are different ways, but it's all, one strategy. My win rate, it really doesn't come down to win rate, to be honest. It comes down to percent return. It comes down to risk to reward. Because like I said before, I could have one-to-ones all day long and win 50% of my trades and break even, right? But I could also have 1-to-5s and be 20% profitable or win 20% of my trades and still break even, right? So it's all a matter of risk to reward and not necessarily win rate. But I would say, to answer your question, probably I'd probably say 65, 70%, maybe, 6.5 to 7 trades out of 10 I win. Of course I lose. I mean, I'm human. Everyone loses, but I think I still have a good win rate. I mean, smart money does kind of have the best of both worlds there because, if you know how the institutions are moving price and you can get in when they're getting in, not only can you have good risk rewards, but you can also have a high win rate. Your probability of trades increases significantly. How long did it take you to master smart money and get consistent? I usually say roughly 18 months. So that is probably I'd probably say that's probably a good amount of time. Some people may take longer. People may take, a shorter amount of time. I was currently at university when I was learning. So I had, classes. I had to study for, all my stuff, my studies. I went to the gym every day. I had to cook my own meals. I had other responsibilities. I had a job actually. So, and an internship at the time. So I was very busy. So I didn't have a lot of time to dedicate to it, but it's not required that you dedicate a ton of time. It's just, if you can dedicate, an hour a day, if you can look at the charts, learn from it, it may take you a longer time. So people learn at different speeds. So, it's not like you have to quit your job and have your full 24 hours of the day dedicated to trading. No, you can just fit it into what you're currently doing in your everyday life. It may take someone who has more time on their hands, less amount of time to learn it, but you can't sacrifice what you're what your daily responsibilities are for trading in and of itself. So for me, it took me 18 months. Some people, it may take a year. Some people, it may take 2 years. Some people, it may take longer. I would say at least a year is probably what you have to put into it. And after that, it's just refinement. The first year is always going to be about probably failing and maybe seeing, a little bit of progression and a little bit more consistency as you go. But after a year's time, between 1 to 2 and 2 to 3 years, you're really going to start to really have that intuition come on board. And it's going to really, your learning curve is going to be like an exponential graph. It's going to be very slow and steady at first. You're not going to think that you're making progress, even though you are. And all of a sudden starts to click later down the road, maybe a year and a half into it, and then boom, it just goes up from there. That's kind of how my experience was. Everyone's different. Yeah, Mark, the trade management, definitely huge. I have that video. If you type in on YouTube, trading nut, 2 components, it probably will come up. I don't remember the title of the video, but I know it said 2 components, something, something, something. I talk about trade management and scaling it. Gold, unfortunately, I don't do gold, guys. It's just Forex. What do you think of AJ? AJ at the current moment, because Aussie is so weak right now, it's quite frankly it's still trending down, and it could potentially break structure to the downside. I'm looking at it right now. It's not a pair that I would want to be trading right now. I'm currently in a trade that's in a little bit of drawdown. I was in really good profit, but it still respected a retail trend line. It's shorting off. I still think it can go long for sure. It's just a matter of when that's going to occur. We're still in a higher time frame uptrend, but it's just, it's just playing around. It's very choppy at the moment. I wouldn't look to trade it at this current time, in my opinion. What confirms and respects the demand or supply zone as lower time frame, change in structure? Yeah, it can be a multitude of different things. If it comes into a higher time frame demand or supply, you can scale in, not necessarily just to the 1 minute. I mean, if you're looking at a 4-hour or hourly demand or supply level, you may want to go to the 30-minute, 15-minute. Look for accumulation or distribution. Just slow down in price, and then wait for some sort of manipulation or break of counter trend structure. That could be a possible confirmation. Let's see here. To mitigate a supply demand zone order block, does it have to close the whole zone or just touch the wick part of it? It just has to come into the start of the demand or supply. So wherever it starts. So if it's if you're in a bullish market and you have that little repricing and the price starts to short off before making that higher high, where price started the initial little sell-off before the rise, that's where the start of the demand would be. So I guess you could say the wick part of it, I suppose. All right, let's see. I appreciate the love, guys. Appreciate the love. If you guys are good to go, I don't want to hold you. We've been here 2.5 hours. You're good to go. If you have questions for me, I'll stay on for a little while. Last one of the year. Sad to go, but definitely well-needed time off. The course is worth every penny. The main group is worth every penny. I appreciate it, guys. I do think so too. Just through what I've learned when I first started trading, and then for what I provide, I think that from what I learned when I first started was quite frankly crap. There are a lot of traders out there who create crap courses and crap mentorship programs because they just want to make a quick buck with a sale and they don't really know how to trade. That's exactly why I create audit videos. If you guys haven't watched those, check it out. It's on my personal YouTube channel. I think the most recent one was the one from November. I did a one in September. I didn't do one in October, which I've been meaning to go back. Just haven't had time to do it. But I did one in November, and I'm trying to have time if I do have time, which I think I do. But I'm going to do one for December too. It's essentially going through every single piece of analysis and trade idea through my entire VIP Discord channel, showing you the before analysis of it that we sent out to the group, and then going to the charts and showing you what happened as a result, counting up all the profits or the wins and losses, all of them, and putting together a total percent return. So it's essentially a full audit. So that kind of, not necessarily, I'm not trying to boast or prove myself. I don't need to prove anything to anyone. But what I want to do essentially, the whole point of the video is to show people that, hey, if you are skeptical about joining a service, if you've been screwed over before, if you are looking for the right group to join, if you're looking for something that will really help you out, I want to give you guys the peace of mind knowing that, we could be that person for you. Obviously, if we're the right fit. That's why we have these, introductory calls before we help you hop on board, just to make sure it's the right fit for you and it's the right fit for us as well. Because we do look for specific things in our mentees. We got to make sure you have the right mindset and everything. If that's the case, then it just makes coaching you a lot easier. Let's see. Do you use the Notion app? If you do, I'm preparing a calculator for average risk reward and partials on the whole trade. I haven't heard of that. So taking partials, it's different for every trade because we have to look at the individual price action of the chart. It's not just a specific, like, take profit or per partial at a 1 to 2 or 1 to 3 every time. It's all based upon the price action of the market. Where could certain levels reverse from? If I'm looking to buy, right, where could price reverse on me? Then I zoom out and okay, where are some supply levels? Are there any sponsored candles buy side that could take price short? Those levels are areas in which I place my take profits because those areas have the highest probable chance of reversing. I'm not saying it's going to reverse. I'm just saying if it does reverse, it should reverse from those levels. So that's why I place my take profits at those levels. So that's why taking partials is not objective. It's subjective every time. But, if you just take a little while and kind of zoom out and look for, where could price reverse on my trade if I'm going into profit, if we're buying and, we're going into profit, where could price actually start to sell off? There may not be an area in which you could sell off. And I'll give you a quick example really fast. So for instance, if I'm in AUD/USD here, actually, let me give you a good example with EJ. EJ is a really good example. This is one I go over a lot. At this time, we were selling in here. We had a good confirmation. We came into a higher time frame level of supply. We had a great reaction. We broke structure. We had to pull back into 144 psychological level into supply, and we started to sell it. We had confirmation lower time frame with lower time frame breaks. We got in 2 other positions. So I think at one point, for one of the trades that had a very small stop loss, for people who are taking profit at like a 1 to 2 or 1 to 3, that would probably be here. Maybe for that trade. But why take profit there? Why would we take profit there? There is nothing to the left that says we're likely to react off that specific level. First of all, we're not even in discount within this huge higher high, higher low level. So we need to be taking partials at lower levels. Where could price reverse from us? I identified 2 regions, one right here and one right here. Why? Because if we zoom out, within this entire higher high, higher low, higher high that we made, right? We created a counter trend. Low, high, low, high, low, high. We came into our last point of supply, filled in balance, had the reaction, and then went long and broke structure. So that would turn from supply to demand. We could have easily reacted here and went long. It would have been just a small pullback just to kind of go with the overall lower time frame trend here. We could have done that. So if I'm selling in here, which I had confirmation for, I need to take partials here and move stop to break even at that point because that could be a region in which price reverses from me. Also, if I zoom out now and look at it from this perspective, higher high, higher low, where could price pull back into if we had an overall pullback before going long? Well, that would be this area of demand in here. This is where we had lower low, lower high, kind of consolidation and then expansion. And that's that last sort of selling volume area of demand. And we had equal lows right there. So 138, beautiful psychological level right at that demand level. That was my second take profit. Third take profit was if the higher time frame supply was held and we actually broke structure. Obviously, that didn't occur. We ended up continuing. So it could have actually hedged. You could have easily buyed right there as well. But yeah, so we got, this one, and, if price reversed, oh well, at least we got out at the right time. But in here, we got out at the right time with our second take profit. We essentially kind of had wick entries in here and then essentially a wick take profit. We got out right at the right time before price reverts because it's an area in which price has the probability of reversing, a high probability. Not to say that it can't. Price could have easily rolled over. But what if it does go long? We have to just always consider the downside. What if it does go against us? Where could that occur? And that's at this demand level and then that demand level there. So that's where we set our take profits, and not just that measly little 1-to-1s, 1-to-2s, 1-to-3s, because then you're basing it off of a dollar amount or a percent amount when you should be basing it off of the price action, where in the market. Because if you're taking profit up here and not like right here, you're leaving all this money on the table. You're leaving all that money behind. If you're trying to take partials down in here, well, then you're not doing it soon enough where you should, because that has a probability of reversing, and it actually did. So then instead of taking partials down here when price is starting to moon against you, now you have FOMO and now take partials right here for no reason. Or it comes back up and just hits you out, break even, or maybe even hits your stop. So possibility. Just trying to help with that, if that makes sense. Oh, let's see. All right, guys, it is 12:30, so I am going to head out here. I'll answer a couple last questions. No prices on the website. Yeah, we don't have prices on the website. We have to just speak with you over Zoom. Just it's a brief chat, maybe like 10, 15 minutes long. Doesn't have to be long. We just want to talk to you, get to know you a little bit, and then we go over the prices there with you. 40% of what? Yeah, so, like I said before, it's just we like to go over prices with you on over the call and then give you that. And if you're able to do it, great. We'd be more than happy to extend that to you. If not, then, that's okay. NZD CAD. I don't really have anything for NZD CAD. I don't think that was a part of my list. Yeah, it's just, it's just straight in an uptrend. We're just extremely bullish. I don't really have a setup on it at the moment. Let's see what else. Yeah, guys, Merry Christmas to you all. I appreciate it. Thanks for the love. Happy holidays to you all. Okay, let's just say this. I'm not going to give you the price, but I will tell you what it's not. With the discount, it is definitely less than $1,000 for everything. I'll just say definitely less than that. With the discount that I'm offering you, the 40% off, it's definitely less than $1,000. I'll just say that. So that's something you would be able to do. We offer payment plans as well, so you don't even have to upfront the full amount. Then we can, book a call. I'll be happy to talk to you. Just try not to book calls on the weekends, just because I probably won't do them. I just want to take, that's the time I get to relax. How much is the course itself? We don't sell courses by themselves because at the end of the day, that's not going to best help you. Because if you take a course, just like anything you're learning, you're going to fail initially with it. Just like you're learning how to play the guitar. Someone teaches you how to play the guitar. It doesn't mean you're going to be a professional guitarist right after that. It takes practice. It takes failure. It takes guidance. It takes, continuous education and reinforcement after you've taken the courses and help to grow the skills over time. So that's why we only offer one all-inclusive package instead of just the courses of itself. I could sell my courses all day long, but I'm not in it for the money, guys. I make my money trading. So that's just why I'm like, okay, fine. I'll take a big hit on the sales amount. I don't really care about sales, but I have to charge, and I'm trying to make it affordable for everyone just because, I have to set price on it. I have to respect my value, but at the same time, I do try to make it very affordable. I'm giving you guys 40% off as well. So hopefully that will help you. But just taking a course on its own, that's why so many people fail, is because they take a course, they fail, and then they blame the people who have created the course. And I think the course is wrong. It's not necessarily the course that's bad. It's just the person doesn't have enough experience with it or help to make it work for them. That's why I have to pair my courses with my mentorship. That's just, for me, the best way of going about actually helping people. It's just the highest probable chance of helping someone really learn this skill. So spent $750 for a garbage course with 2 great slides and 1 5 video, other paid $300. Yeah, I've done the same when I first started. I've spent thousands on education before, and that's just why my whole motto is, we want to be the mentors we wish we had when we first started trading. And I finally met my mentor, but when I first started, I was spending money on courses, mentorship programs that were just straight up crap. That people, they didn't even know how to trade. They just presented it like they knew how to trade. They, finessed their entries and, presented just only the winning trades when they probably had a billion losing trades. And they just weren't good traders. So we just wanted to be different. We want to be transparent. That's why we created those audit videos, so you guys know, like, hey, we're sending out all this stuff and it's playing out. I mean, we must know something, you know. So that's why I do that. And I say, you know, if you guys have other mentors out there and you guys just don't know if they're the right mentor for you, or if you kind of question them, or like, I don't know if these people are actually good. They're trying to sell me this, but how do I trust them? Ask them to create an audit video, essentially. If they send analysis or send signals or whatever they do, ask them for their MyFX books. Ask them for, you know, to create an audit video. And most importantly, ask them to do a trading challenge with Ariel Fx, because I guarantee you they're going to lose. Now, if they're already a professional trader, then maybe that would be fun. That would be a competition. But that's how you can weed out the crap traders. I would love to do a trading challenge with somebody. That would be so fun. And I'm not scared of doing that, just because if I was, I wouldn't be telling you that. People who are scared of doing trading challenges probably aren't good traders. All right. Any last minute questions, guys? Have a great holiday. Have a Merry Christmas. Take some time off, relax, and, you know, just spend some time with family and friends, as you all do deserve, and take a little bit of a break. And we're going to come back and kill it in 2023. I have a lot of great stuff planned. I'm going to come out with a lot more stuff. And as always, guys, if you're currently in my mentorship program, everything we create in the future, you get for free. We don't believe in upsells and all that crap, because we want you guys to focus on education and not about the money. So take care, guys. We'll talk to you all in 2023. Have a Merry Christmas and Happy New Year.